expects to play. The NBA, NHL, and MLB have all had players opt out from playing. None will get paid, but all got the blessing of their league. Not the case in the WNBA, where Elena Delle Donne is the MVP. Last year led Washington to the championship. She says she was advised by her doctor not to play because of Lyme disease. The league says that's not a valid reason and is forcing her to play. The Washington NFL team, the team with no name. It's not Redskins anymore. The new name may be being held up because of a man who lives in Arlington, Virginia, who just 9 days ago received trademarks on 8 nicknames that the team was considering changing to. It's not known if his motivation was to try and force the team to keep Redskins or to get paid in return for relinquishing the trademark. Speaking of getting paid, the deadline's tomorrow for a player with a franchise tag to sign a multi-year deal. It doesn't appear as if it'll happen for Dak Prescott in Dallas. Cowboys quarterback set to make $31.4 million this upcoming season. Deshaun Jackson, the Eagles wide receiver who recently made anti-Semitic posts, spoke with a 94-year-old Holocaust victim, and Jackson now says he plans to visit Auschwitz. John Stashower, Bloomberg Sports. Nathan.
All right, John, thanks. And veteran tight end Greg Olsen just signed a 1-year contract with the Seattle Seahawks, but he's already lined up his next gig. Olsen tells the Associated Press he's agreed to a contract to be Fox Sports' #2 NFL game analyst, joining Kevin Burkhardt in the booth as soon as he decides to retire from football. This is Bloomberg.
Hey, y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering the innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Asset managers who seize change to launch new...
As shops open up again, how do we all stay safe? Fontaine runs a craft store.
We've made the shop COVID safe. If you can't keep 2 meters apart, make sure it's 1 meter with extra precautions. Know the number of customers allowed in at any one time. Use the hand sanitizer at the entrance and use contactless payments. I'm loving serving customers again, but please, to keep us open, we've all got to keep to the guidelines.
Stay alert. Control the virus. Save lives.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Tuesday morning by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
Tuesdays at KFC gonna get you like, wow, pow, chow, kapow, get down right now. If you know how, then take a bow, because this deal's gonna raise a brow. Get 9 pieces of original recipe chicken for an eye-popping $5.99. What? the... Every Tuesday at KFC. Participating restaurants ends 18th of August 2020. Tuesdays only, subject to availability, not available online.
Just one cornetto.
Ada, love, your mum's on the phone.
Give it to me. No, the phone I mean.
Aiden, is that you?
Give me cornetto. Your turn, Mum. Sing it.
Oh, from Walls Ice Cream.
Yes, Mum. Love it.
Deliciously creamy, crunchy wafer cone, and the secret chocolate hidden in the tip. Connect with the ones you love this summer. There's just one Cornetto from Walls Ice Cream.
Give yourself a Diet Coke break.
Influential conversations from Bloomberg Television. Here's Yvonne Mann.
To Hong Kong, a resurgence of new coronavirus cases has led the city government to bring back social distancing measures after reopening the economy for about 2 months. And they seem to be stricter than what we saw in the first and second wave. Joining us now is Dr. Gabriel Leung, Dean of Medicine at the University of Hong Kong. Do you think that the government was too early in lifting some of the early restrictions?
I think that if one does a sort of backward look now with the 2020 retrospectoscope, then you wonder whether we have maybe had some potential frailties in terms of inadequate testing of the exempted people who come into Hong Kong. And these are mostly air and sea crew, ship crew. Obviously, they need to come into Hong Kong because we need them to pilot the airplanes or the ships, but we hadn't been testing them. So I think that loophole has now been plugged, and now we are now leveraging the private sector, hoping that the private sector would give a very, very substantial boost to the testing numbers, even though we are already testing quite intensively by global standards.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app, or check your local cable listings. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And I'm Karen Moscow. And European stocks extending a global retreat. German bonds climbing as investors weigh the risk of the upcoming earnings season, an economic hit of rising virus cases. S&P and NASDAQ futures are pointing to a higher open after they finished in the red yesterday. And we check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures up 8 points this morning. Dow futures up 80. NASDAQ futures up 24. The DAX in Germany's down 1.6%. 10-year Treasury down 230 seconds, yield 0.62%, and the yield on the 2-year 0.15%. NYMEX crude oil is down 0.9% or 35 cents at $39.75 a barrel. COMEX gold is down 0.8% or $14.90 at $17.9920 an ounce. The euro 1.1354 against the dollar. British pound 1.2510, and the yen 107.37. And of course, we're watching for earnings today. J.P. Morgan Chase, Citigroup, and Wells Fargo among companies scheduled to report. That's a Bloomberg Business Flash. Now here's Michael Barr with more on what's going on around the world. Michael.
Karen, the coronavirus pandemic stripped an estimated 5.4 million Americans of their health insurance between February and May. According to a new analysis from Families USA, it's a stretch in which more adults became uninsured because of job losses than ever in a single year. It is primary day in Alabama. Former Attorney General Jeff Sessions is trying to win back his old Senate seat. Texas voters are also heading to the polls today for runoff elections. The Trump administration rejected China's expansive maritime claims in the South China Sea, reversing a previous policy of not taking sides in such disputes and escalating tensions with Beijing on yet another front. The move aligns the U.S. with a 2016 ruling by a UN tribunal that found China's claims to waters also contested by the Philippines were unlawful. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Nathan.
All right, Michael, thanks. It's 6:19 on Wall Street, live from the Bloomberg Interactive Brokers Studios. This is Bloomberg Daybreak as we get ready for the kickoff of second quarter earnings season. It really gets going later this hour when we get results from J.P. Morgan. Bloomberg Markets reporter Danny Berger is with us ahead of that. Good to talk with with you this morning, Danny. Thanks for being with us. And, this market has been running for so long without much in the way of earnings guidance. I wonder whether we could see that change this morning.
Certainly. These banking results, they're hotly anticipated. RBC analysts use the phrase that they could be sloppy and shocking. I think that there's just a lot of uncertainty in this picture in terms of where we go from here, especially in the U.S. with case counts rising. But when it comes to these banks, look, last quarter, they only had a few weeks of the pandemic to go off of and give their assumptions for the quarters to come. Here, these banks have had 3 months of the pandemic, and that will be reflected in their second quarter earnings. So hopefully what we get from the banks this time is a more concrete grasp on the amount of money they'll have to set aside for bad loans, for example, what they're anticipating. And that should hopefully, again, give us also a glimpse into what to expect for the greater economy as well.
So loan loss provisions is what you're alluding to here. Is that going to be the main focal point for analysts this morning, or are there other lines of the earnings reports that could draw a lot of attention?
It's definitely going to be one of the biggest ticket items. I think that part of it has to do with the fact that they're supposed to be even higher than last quarter, the highest loan loss provision since the financial crisis. And the thing with these figures is even if, yes, banks give good trading results, which we do expect to some effect, they could really fade some of those gains, and we could see the stock prices react negatively if the credit outlook is just so weak. So loan loss provisions, I think, top of the agenda for a lot of analysts and shareholders alike. But again, some of that is already baked into the picture. Trading, that's going to be looked for a bright spot. Investment banking as well. And we also want to know how their consumer divisions are doing, because consumer has been really important for these banks in prior quarters. But of course, a lot of their customers are having a difficult time paying back debts. They're not taking on new debt, which means that net interest income is going to be weaker. Retail is weak, so some of the credit card fees, again, these are areas that had previously, before the pandemic, been really strong. So we want to see if there's any scope for that section to bounce back for these banks.
Yeah, that could be really interesting, because the consumer has been sort of sluggish during this recovery. And if we get a clearer picture from the banks about what that means, specifically in terms of numbers, it makes you wonder whether the broader market, which has been looking past a lot of the economic damage from this coronavirus, whether that can continue.
Right, absolutely. And I'm really interested to hear the outlook from banks about businesses reopening, because, of course, that's really important for them in terms of paying back debts, because, businesses who aren't open are going to struggle to do so. So what are these banks going to say about their outlook when you look at the Sun Belt faced with nationwide shutdowns? How concerned are they about businesses reshutting? Or are they going to say, look, some of the pain that we faced, it's certainly temporary. This isn't an existential issue. So, yes, of course, this is very banking specific, but I think there's a lot we can extrapolate from what they say. And if there's a lot of doom and gloom saying, hey, we don't know what's going to happen, there are new outbreaks, it's going to mean we have to put even more aside in terms of bad loans going wrong, we're going to have to continue to do this, that certainly could put a bit of a dour mood on the entirety of the market and earnings to come.
Just about a minute left here, Danny. What are you wanting to hear from the banks in terms of forward guidance for the second half?
Well, what we really want to hear is that their loan loss provisions are able to come down, that the second quarter in the middle of the pandemic, that this is as high as it's going to get. And also related to loan loss provisions, that other sectors of the banks, like investment banking, for example, were strong enough that they have the flexibility to put the capital aside to deal with this. So we want to see that they're in a strong position to throw really whatever the economy is coming at them with.
Bloomberg Markets reporter Danny Berger, again, thanks for being with us this morning ahead of second quarter earnings from JP Morgan, Citigroup, and Wells Fargo, all coming out before the opening bell this morning. We're expecting JP Morgan's results, in fact, later on this hour. We will break down those numbers for you here on Bloomberg Daybreak. Ahead of that, futures moving higher after yesterday's losses. S&P futures are up 10 points. Dow futures up 104. NASDAQ futures higher by 26 points. European stocks still on the decline. The stock 600 is down 1.2%. The 10-year Treasury is down 2/32. Yield on a 10-year note 0.62%. This is Bloomberg.
This is a Bloomberg Money Minute. Investors continue to weigh the risks of the upcoming earnings season and economic hit of rising coronavirus cases. For now, the mood looks optimistic. The futures pointing to a higher Wall Street open, but it was a mostly lower close to start the week on Wall Street. The S&P 500 fell about 1%. Some big banks report earnings today, including JP Morgan Chase, Wells Fargo, and Citigroup. We also hear from Delta Airlines. The struggling airline British Airways is planning to raise more than $1 million from the sale of paintings and prints from its corporate art collection at Sotheby's this month. The carrier is selling the art at a time when global airlines are reeling from the impact of the COVID-19 pandemic, which effectively shut down air travel. The big drug maker Roche is teaming up with the Massachusetts-based firm called Blueprint Medicines to develop and market a cancer therapy. The deal is worth as much as $1.7 billion. Gina Cervetti, Bloomberg Radio.
The following is a message from PGIM.
Welcome to Outsea in 60, Perspectives from PGIM Thought Leaders. Here's Mark Baribeau, the head of global equity at Jennison Associates.
You're looking at bigger applications of technology playing a role in keeping us all connected, giving us access to information or goods very quickly. So we don't see any of those trends changing. In fact, they're likely to accelerate. There's some new things that have come along, though, that people might find useful, like telemedicine. There were skeptics about that, and I think the more people using it, especially the more doctors are using it today, the more they're liking it. You can see more patients. It can be more effective. It might actually be a better solution.
Hear more PGIM perspectives at pgim.com. That's pgim.com. Partner with PGIM, the investment management business of Prudential. These statements are not intended to be investment advice and should not be used as the basis for any investment.
Here's to you that learned with homeschooling that your kids are smarter than you. Here's to all the self-taught banana bread bakers. And to you that rocked that very questionable homemade haircut. Costa is giving £3 to everyone that missed us as much as we missed you. Get your £3 in the Costa app today and enjoy a coffee, cake, or snack on us. Come on, you earned it. Terms and conditions apply. For details, visit costa.co.uk/terms.
Eurotunnel Le Shuttle is a safer way to get to France and beyond, with social distancing built in. There's no scrum at security, hanging around for your bags, or shouldering strangers in your seat. With Eurotunnel Le Shuttle, simply drive on at Folkestone and stay in your car, comfortably. Then drive off 35 minutes later. Stay safe. Go Tunnel, Eurotunnel Le Shuttle, a safer way to France and beyond.
Ever wondered how people's postcode lottery works? Easy. Your postcode is your ticket. And every weekday it gives you the chance to win £1,000 or £30,000 every weekend. And every month players in your postcode could win a share of £3 million. Join in at postcodelottery.co.uk/radio before midnight on the 23rd of July to play in the August draws. PPL manage lotteries on behalf of good causes. 16 plus. Conditions apply. Play responsibly.
And action.
I was offered one.
Cut. That's not on the script.
I was offered one. Get you.
Ladies and gentlemen, I was offered one.
Come, boy. I was offered one.
Don't take our word for it. 9 out of 10 people said they were offered a great value deal with O2. Get yours today, in-store, online, or by phone.
I was offered one too. O2 Retail Exit Survey 309 of 348 agreed with the statement. O2 offered me a great value deal. For full verification, see o2.co.uk/terms.
What have you missed the most? A haircut? A visit to the shops?
Oh, you look lovely in that.
What about a nice lunch?
Fish and chips, please.
Salt and vinegar with that.
Or an afternoon in a pub garden? Fancy a casual bike ride? Or perhaps something a little more intense? Or maybe you want a relaxing day out. Whatever you've missed, get out there and enjoy it again safely. Find out how at gov.uk/enjoy summer safely.
Live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Daybreak.
And it's 6:30 on Wall Street. Good morning. I'm Nathan Hager.
And I'm Karen Moscow. We're just about 3 hours away from the opening of U.S. trading. Let's get you up to date on the news you need to know at this hour. U.S. futures are higher this morning, while stocks in Europe and Asia tumble. Virus concerns are weighing on sentiment as California rolls back reopening measures. Governor Gavin Newsom is responding to rising infections by closing indoor activities.
Restaurants, wineries, tasting rooms, movie theaters, family entertainment centers, zoos and museums, card rooms, and the shuttering of all bars.
California is reporting record hospitalizations, and Newsom says more restrictions could come for counties with increased exposure.
In Florida, intensive care patients in Miami-Dade County hit a fresh record. Miami Mayor Francis Suarez says hospitals are near max capacity.
Our hospital systems are getting strained. We have a very small capacity in our ICUs.
Miami's mayor says there are currently no plans for another lockdown, but he isn't ruling one out.
Cities and states are grappling with how to teach classes this fall. The White House is pushing for in-person learning, but the second largest district in the country has decided not to return kids to classrooms.
The fall semester will begin where the last one let off, with distance learning. That students will not attend classes in person.
L.A. Mayor Eric Garcetti is starting the year with online classes. San Diego is doing the same. The move comes in direct opposition to President Trump, who's made reopening schools one of his top priorities.
So investors are weighing the impact from the virus, and today they also weigh earnings from U.S. banks. J.P. Morgan, Wells Fargo, and Citigroup report this morning with the pandemic front and center in second quarter results. We get more from Bloomberg's Danny Berger.
It's going to be the second quarter in a row that was really hurt badly by credit. This we know that's caked into the pie here, as well as better trading revenue results, too. So you have a lot that's already been assumed. So the one last potential for a surprise to the upside really seems to be investment banking.
Bloomberg Intelligence expects revenue gains at J.P. Morgan and Citigroup and a decline at Wells Fargo. Loan loss provisions are likely to weigh on results from all three.
And again, futures are moving higher this morning. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures up 8 points. Dow futures up 78. NASDAQ futures up 19. The DAX in Germany is down 1.5%. 10-year Treasury down 2/32, yield 0.62%, and the yield on the 2-year 0.15%. NYMEX crude oil is down 0.9% or 35 cents at $39.75 a barrel, and COMEX gold is down 1%. Straight ahead, we have the latest world and national news, and this is Bloomberg.
All right, thanks, Karen. 6:33 on Wall Street. Michael Barr has more on what's going on around the world. Good morning, Michael.
Good morning, Nathan. New York Governor Andrew Cuomo says schools will be approved for reopening if their region is in phase 4 and the daily infection rate remains 5% or lower over a 14-day average. The governor says the state will maintain a safety valve after it determines during the first week of August which schools can reopen. Cuomo went on to say if the virus spikes between the first week in August and the day schools open and the regional infection rate over a 7-day average is more than 9%, then the school will close.
We're not going to use our children as a litmus test, and we're not going to put our children in a place where their health is endangered.
Starting today, travelers from certain states landing at New York airports could face a $2,000 fine for failing to fill out a form that state officials will use to track travelers and ensure they're following quarantine restrictions. New Jersey Transit trains, buses, and light rail may resume operating with full capacity.
We are lifting the 50% capacity limits currently enforced on NJ Transit and private carrier buses, trains, light rail vehicles, and Access Link vehicles effective 8 p.m. this Wednesday.
Governor Phil Murphy says face coverings will remain required for all staff and passengers. The White House is denying it's trying to discredit one of their coronavirus task force members, Dr. Anthony Fauci.
I have a very good relationship with Dr. Fauci. I've had for a long time, right from the beginning. I find him to be a very nice person. I don't always agree with him. I closed the border, as you know, to China. I did the ban on China, heavily infected.
President Trump. However, the White House press office actually sent reporters a list of quotes that Fauci has made that the White House said he was just wrong. A tell-all book from President Trump's niece gets released today. The publication follows a judge's rejection of the Trump family's attempt to stop it. It is primary day in Alabama. Former Attorney General Jeff Sessions is trying to win back his old Senate seat. He is up against former Auburn football coach Tommy Tuberville for the Republican nomination. The winner will face incumbent Democrat Senator Doug Jones in the fall. Someone vandalized the Black Lives Matter mural painted in front of Trump Tower on Fifth Avenue yesterday, and it was all caught on video. Police are looking for the person who walked up to the mural and dumped red paint over it. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Nathan.
Thank you, Michael. It is coming up to 6:36 on Wall Street. Time for the Burden Accountants and Advisors Sports Report. Here's John Stashower.
All right, Nathan. Steve Cohen back in the game, trying to buy the Mets. He withdrew his $2.6 billion bid due to being forced to wait to gain control. But with those restrictions no longer in place, Cohen has reportedly bid an even $2 billion. Although Fox Business reports MLB owners don't want Cohen in their club for fear he would spend so much he would drive up player salaries. And new names have surfaced in the group that includes Alex Rodriguez and Jennifer Lopez. Other investors include former NFL players Joe Thomas and Brian Urlacher, current Chiefs tight end Travis Kelce, even a marginal NBA player, Mason Plumlee. Their bid reportedly $1.7 billion, with A-Rod and J-Lo putting up $300 million. Waiting to hear on the new name for the NFL team in Washington. A man in Arlington, Virginia just got the trademark on 8 names that were being considered, but Redskins is out. Owner Dan Snyder said to be working on a new name with Ron Rivera, who is Snyder's 9th coach in the last 20 years. He's never coached a game or even a practice in Washington, and yet he will help decide the new name. Houston Rockets star Russell Westbrook tested positive for the virus. Says he feels well, but he'll go into quarantine. Memorial Golf teeing off Thursday in Ohio. It's Tiger Woods' first tournament since February, and he's going to play with Rory McIlroy and Brooks Koepka. The Patriot League following the lead of the Ivy League. No fall sports. They are letting Army and Navy make their own decisions, and the athletic director at Navy says he's hopeful that even if there's no college football season, there can still be an Army-Navy game in December. John Stashower, Bloomberg Sports. Nathan.
All right, John, thank you. J.P. Morgan Chase is the first bank to report earnings this morning. In fact, we're scheduled to get those results in less than 10 minutes. Here with a preview is Bloomberg's Larry Kofsky.
J.P. Morgan should keep its global lead in trading revenue, says Bloomberg Intelligence, led by strength in fixed income. Stock trading and underwriting fees should also rise, though merger and acquisition revenue may decline. Growth from last year's second quarter will provide some offset to higher loan loss provisions. Staffing, potential cost-cutting, and investment spending are key to the bank's expense outlook. Analysts surveyed by Bloomberg are forecasting a second quarter profit of about $1.04 per share on revenue of $30.4 billion. Larry Kofsky, Bloomberg Daybreak.
Thanks, Larry. On the economic front today, we get data on U.S. inflation. Economists predict the consumer price index rose 0.5% in June. Here with more is Bloomberg's Michael McKee.
The oil deal between Russia and Saudi Arabia pushed up gasoline prices in June, and that will have an outsized effect on the headline consumer price index. CPI inflation may hit its highest month-on-month reading in over 7 years. The question is, how much of that might bleed over into core prices? High unemployment and substantial economic slack should still dominate, although there may be pockets of upside pressure on account of supply constraints. Absent any surprise, however, June may mark the low for consumer prices. The market impact either way is likely to be muted, given the data are basically a month old. Michael McKee, Bloomberg Daybreak.
All right, Mike, thank you. As the coronavirus pandemic forces fresh shutdowns in parts of the country, Apple is making plans to readjust its retail operations. Here with that story is Bloomberg's Charlie Pellet.
The technology giant is pushing retail staff to work remotely as the virus forces the company to shut some of its stores again. This according to a video message sent to employees. It is also shipping COVID-19 test kits to employees' homes, and it has told staff in a memo that a full return to U.S. offices won't occur before the end of the year. Charlie Pellet, Bloomberg Daybreak.
Thanks, Charlie. While retailers across the world shed jobs, Walmart is hiring. CEO Doug McMillon tells us he's hired more than 400,000 workers since the start of the pandemic. He spoke with David Rubenstein on Leadership Live, heard weekdays on Bloomberg Television.
Hundreds of thousands of our associates that needed to or wanted to stay home have, and so we had a need for a lot of people to run the stores, serve as it relates to e-commerce, and also respond to the demand that's gone up. About 60% of the 400,000 that we've hired since the middle of March are temporary in nature. So we'll retain a big portion of them, but certainly not all of them.
Doug McMillan says he's also trying to create more diversity among Walmart's workforce. It is top of mind for the world's largest brick-and-mortar retailer, but McMillan concedes there is still a lot of work to be done. Finally, Swiss watchmaker Swatch has cut about 2,400 jobs and reported its first loss ever. Sales in the first 6 months of the year plunged 43%. Futures moving higher. This is Bloomberg.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing, LLC. Member FINRA, NYSE, SIPC.
I've always wanted to learn another language, but every time I try, it never sticks. So I decided to give Babbel a try, and I really like the teaching method of the app. I started with the beginner lesson on Babbel, and it starts with simple words and phrases, and soon you're putting those words into a conversation. Each lesson takes about 10 to 15 minutes, and they're all really different, which keeps things interesting. The app is really smart. It actually keeps track of the words I'm struggling with so I can practice them and get better. I chose Babbel because it was created by real language teachers. They built it around real life, how people actually communicate, and what they care about. I can't wait to use my new language skills in the real world. Dos cervezas, por favor.
With Babbel, get conversational in Spanish, French, German, and more. It just takes 10 to 15 minutes a day. Now try Babbel free. Just go to Babbel.com and start learning a new language today. That's Babbel.com. Babbel.com.
This is a Bloomberg Pursuits look at luxury.
Eurotunnel Le Shuttle is a safer way to get to France and beyond, with social distancing built in. There's no scrum at security, hanging around for your bags, or shouldering strangers in your seat. With Eurotunnel Le Shuttle, simply drive on at Folkestone and stay in your car comfortably. Then drive off 35 minutes later. Stay safe. Go Tunnel, Eurotunnel Le Shuttle, a safer way to France and beyond.
So I often struggled at school. Once, when we had a maths test, I looked around the room and everyone was just doing it. And I couldn't, and I began to cry. But my teacher came over and said, it might look like one big problem, but it's just a handful of small ones, and you can deal with that. I hear her voice in my head for every problem I face to this day.
Teaching. Every lesson shapes a life. You could get £26,000 tax-free to train as a teacher. Subject to eligibility, selected subjects only. Search Get Into Teaching.
Thanks to National Lottery players, the Emerald Centre are now providing emergency food supplies and support for people in Bedfordshire like Alan. Thank you. And £600 million of National Lottery funding is on its way to thousands more local projects in England and across the UK during these exceptional times.
Thank you.
Thank you. Thank you.
Thank you.
Thank you. The National Lottery. Your numbers make amazing happen.
At Vauxhall, we're feeling naughty. So this July, you'll get 0% interest and 0 to pay for 3 months on selected new Vauxhall cars and vans. Oh, and if you're a new customer, you'll also get a naughty £1,000 extra when you part exchange your old vehicle. Search Vauxhall event from the 10th to the 27th of July. Participating retailers, customer must part exchange non-Vauxhall that has been registered in their name for a minimum 90 days. T's and C's. First 3 monthly payments deferred. Personal contract purchase and conditional sale. Subject to status. 18+. Vauxhall Finance.
Ready for a one-of-a-kind look at the NFL? On the PFF NFL podcast, Steve Palazzolo and Sam Munson interpret the unique stats of Pro Football Focus to analyze the league, uncover secret superstars, and discuss which teams to watch out for in the next Super Bowl.
Let's talk some football. Let's do it, Steve. All sorts of stuff. We're going to do most improved defenses around the NFL. Solomon Wilcots, our very own. He went into some detail over at PFF.com. Most improved defenses around the
Search PFF NFL on TuneIn to listen.
Decision makers to a network of news and financial information 24 hours a day. Powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Radio. Now, a global news update.
The death toll from coronavirus has exceeded 135,000 in the U.S. Correspondent Erica Hill says about two-thirds of U.S. states are seeing the infection rate rise.
California shutting down again as cases skyrocket. Houston's mayor asking the governor for a shutdown as an Army medical team arrives in the city to help deal with the surge in cases, now topping 30,000. The reality? A majority of the country is moving in the wrong direction. Florida reporting more than 15,000 new cases on Sunday, more than any state in a single day since the pandemic began. As cases surge in Georgia, Atlanta is moving back to phase 1, which includes a stay-at-home order.
There's Erica Hill. The British government is reportedly poised to backtrack on plans to give Chinese telecom giant Huawei a role in the UK's new high-speed mobile phone network. I'm John Trout.
It's a new disease making an unprecedented impact.
The job losses were widespread.
It is a stunningly historic moment.
Your best strategy?
Is this a market that's accepted reality?
Bloomberg Surveillance, weekday mornings at 7 Eastern on Bloomberg Radio. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and we are watching for earnings this morning. J.P. Morgan Chase expected to release their earnings any second. Ahead of that, futures are higher. S&P futures up 10 points, Dow futures up 101, and NASDAQ futures up 18. The DAX in Germany is down 1.5%. The 10-year Treasury down 3/32, yield 0.62%, and the yield on the 2-year 0.15%. NYMEX crude oil is down 0.9% or 37 cents at $39.73 a barrel. COMEX gold is down 1% or $17.90 at $17.9620 an ounce. The euro 1.1365 against the dollar, British pound 1.2517, and the yen 107.40. That's a Bloomberg Business Flash. Now here's Michael Barr with more on what's going on around the world. Michael.
Karen, with COVID-19 rates rising in California, the state is locking back down under new orders. Bars and movie theaters are closed again. In many areas, gyms, churches, hair salons, barbershops, and indoor malls are being ordered shut down. Los Angeles school districts are announcing schools will not reopen in the fall. The Trump administration rejected China's expansive maritime claims in the South China Sea, reversing a previous policy of not taking sides in such disputes and escalating tensions with Beijing on yet another front. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Nathan.
All right, Michael, thank you. We are live from the Bloomberg Interactive Brokers Studios. We're at 6:48 on Wall Street. Time now to check what's going on in D.C., where some of the top stories include Vice President Mike Pence telling governors the administration will support them as coronavirus positivity rates hit new highs in 13 states. Senate Majority Leader Mitch McConnell says Republicans will pitch their stimulus plan next week, and Joe Biden plans to call for $2 trillion in clean energy spending over 4 years in his latest economic revival proposal. Also making news as the pandemic gets worse, President Trump appears focused on its impact on him. Joining us now, Bloomberg News politics editor Kathleen Hunter. Good to have you with us this morning, Kate. Of course, we've seen the president use speeches and tweets to air grievances in the past, but what is it, reaching a new level now?
I think it absolutely is, Nathan. I think the thing that we're seeing here is, the president is really slumping in the polls. Biden is beating him out in a number of battleground states and in some of the national polling as well. And I think that there are just kind of these back-to-back crises, everything from the coronavirus to the economy being down and the racial justice protests that are going on throughout the country. And I think this is a tactic we've seen Trump revert to time and again when he's under pressure, is sort of picking these fights with different characters that he sees as adversaries, and also I think like painting himself as the victim, which we're seeing increasingly happen nowadays.
As you say, it is a tactic he's used in the past, but I guess the difference now is this is a pandemic. It's pretty difficult to bend a virus to your political will.
Yeah, and I think there's a risk there, obviously, where the optics are, you have, thousands of Americans, more than 130,000 Americans now that have died of the coronavirus, and have the president out there essentially lamenting his situation. It's certainly not usually how presidents in the past have responded to crises, and certainly opens Trump up to criticism that he's not focusing on the right things.
All right, and just quickly, Kate, let's turn to Joe Biden, because he is expected to propose a pretty significant clean energy policy later today.
Yeah, and this is something I think the key thing to watch here is the degree to which this policy that's being put forth by Biden does get support, or at least, measured support from the left wing of the party, given that it doesn't go quite as far as some of the Green New Deal proposals. I think I think Biden's trying to balance his proposal with, getting support from progressives, but also maintaining support from more moderate swing state voters.
All right, Bloomberg Politics editor Kathleen Hunter, thanks as always for being with us this morning. Now we want to turn to earnings from J.P. Morgan that have just begun to cross the Bloomberg terminal, already generating a couple of red headlines as well, particularly on the loan loss provisions. Let's get instant reaction and analysis now from Allison Williams, Senior Financial Services Analyst for Bloomberg Intelligence. Of course, the red headline right now, Allison, the quarter includes nearly $9 billion of reserve builds, largely due to the coronavirus, a bigger than expected loan loss provision. Your reaction?
So it looks so far strong relative, so it's all relative, right? But they were able to exceed the bottom line estimate, even though they took a provision that was bigger than expected, the reserve building bigger, and the total loss provision also bigger. Trading extremely strong. This was something that was well flagged, but I think it even beat the estimates there.
And that could be a lot of the reason why we are seeing the stock gain in the pre-market right now, higher by just about 1.5%, or now higher by a little less than 1%. What else is standing out to you from these earnings, Allison?
So the fact that they were able to, despite the fact that they took a reserve that was a loss provision that was over $10 billion, that the return on tangible common equity was 9%. So again, that speaks to the bottom line number. Deposit growth also looking very strong. Average deposits up 25%. So we haven't seen the net interest margin yet, but that obviously bodes well for the margin because you're bringing in those low-cost deposits. Average loan up 4%. We haven't really seen the makeup of that, and we're also going to want to dig a little bit more into the details to see, what's sort of happening with the underlying loan quality of the book. We haven't really seen that quite yet.
We've also got commentary this morning from the CEO of J.P. Morgan, Jamie Dimon, saying there's still much uncertainty on the future path of the economy, but in the CEO's words, we are prepared for all eventualities. How could that set the tone for what we hear from the rest of the big banks, including Citi and Wells Fargo, later on this morning?
Well, I think for Citi, they're going to, investors are going to want them to sort of match the two big numbers that we're seeing from J.P. Morgan this morning. So one, J.P. Morgan's revenue looks like it was up 80%, around that. There was a gain in the prior year quarter, so I'm not sure if that's adjusted or not. But fixed income up double almost, and equity up 40%. We're going to want to see if Citigroup can at least be in that area. And then secondly, with the provision, in the words of J.P. Morgan, this $10 billion really goes a good way in sort of preparing them, or the $9 billion of reserve building. So will sort of the reserve ratio after this build at J.P. Morgan and Citi, will that be comparable? That's what we'll be looking for.
In our last minute here, of course, we've got the earnings call coming up later on this morning. What are you going to be wanting to hear from that?
So part of it will be what are the expectations that are sort of embedded in the reserve? What are the trends of the deferrals as they're coming off deferrals? Are they sort of being rolled over into new modifications? Especially what's happening with the quality of the loan book, the degree to that loans were commercial loans that were drawn down sort of in that period of March and April, how much of those have been paid down, and what are the economic assumptions that are sort of built into these forecasts to get a sense of, what is the upside and downside from here as things play out.
Bloomberg Intelligence Senior Financial Services Analyst Allison Williams, thanks for this analysis of J.P. Morgan's second quarter earnings. And again, the stock, Karen, is higher by 1.3% in early trading.
All right, Nathan, thank you. It is 6:55 on Wall Street. Time for the Bloomberg NJIT STEM Report, brought to you by New Jersey Institute of Technology. Ranked in the top 2% nationally for alumni mid-career earnings and number 1 for student upward economic mobility. Learn more at njit.edu. Now, here's what's making news in science, technology, engineering, and math. The era of free news for Facebook and Google may soon be over. Australia's competition regulator will publish draft rules this month, forcing the two tech giants to share revenue generated from news with the original publishers. A final version of the code, the first of its kind in the world, is due to follow soon after. Should watchdogs in other markets follow suit, it would chip away at two of the most successful business models of the 21st century, built largely on content free-for-alls. The Arabian Desert scarcely seems like an ideal place to source drinking water, but an Arizona-based technology firm is doing just that in what may be the first operation of its kind. Instead of drilling wells or purifying seawater, it'll wring moisture from the air to create bottled water at a plant 12 miles from Dubai. The company, Zero Mass Water, will use renewable energy instead of the fossil fuels that power the many desalination facilities in Dubai and the rest of the United Arab Emirates. And speaking of the United Arab Emirates, liftoff for the country's Mars orbiter has been postponed until Friday due to bad weather at the Japanese launch site. The orbiter, named Amal or Hope, is the Arab world's first interplanetary mission. The launch was originally scheduled for tomorrow. Hope is set to reach Mars in February of 2021, the year the UAE celebrates 50 years since its formation. And that's today's Bloomberg NJIT STEM Report. And again, J.P. Morgan Chase is up 1.4% in early trading following its earnings release. And we'll have much more on J.P. Morgan Chase's earnings on Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. That's all straight ahead. For Nathan Hager, I'm Karen Moscow, and this is Bloomberg.
Influential conversations from...
What have you missed the most? A haircut? A visit to the shops?
Oh, you look lovely in that.
What about a nice lunch?
Fish and chips, please.
Salt and vinegar with that.
Or an afternoon in a pub garden? Fancy a casual bike ride? Or perhaps something a little more intense? Or maybe you want a relaxing day out. Whatever you've missed, get out there and enjoy it again safely. Find out how at gov.uk/enjoy summer safely.
Who says only the experts get to do the talking? On the Scuttlepuck NHL Hockey Podcast, irreverent outsiders Mike Bond and Dale Horde give their untrained opinions on all things hockey from the fans' perspective.
I don't know how you get those guys out of there. And Crosby, as great as he's been, it's just such a different era, so it's tough with the... he didn't have the crazy number of points that Orr, Lemieux, and Gretzky did. They just...
Search Scuttlepuck on TuneIn to listen.
Looking for your daily fix of NFL news and analysis?
In that. So we had to blow it up and do Super Bowl predictions instead.
Look no further than the Pick 6 podcast, where CBS sports writer Will Brinson gets you up to speed with what's trending in the NFL that day, so that you're always in the know.
Yeah, it's pretty revealing of Brinson's methodology for predictions. When he gets mad at people for predicting good teams are going to win the Super Bowl or good players are going to win major awards, that's how you wind up.
Search Pick 6 on TuneIn to listen.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Bloomberg.com, on the Bloomberg Business app, and at Bloomberg Quick Take. This is Bloomberg Radio.
A lot of businesses are not buying into the V. They see a different destination regardless of the journey.
The fact is we are likely facing a slower growth, a sluggish economy as we do recover out of this, and that is a great backdrop for secular growth.
The stock market is missing this point. This is not a balance sheet recession.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance with equity futures positive, kicking off Q2 earnings season. We're live on Bloomberg TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Tom Keene, Jamie Dimon kicking things off over at JP Morgan, underlining that fortress balance sheet.
Yes, you know, John Farrow, this is so important. Each bank comes out with a different look and feel, and there's no question to me, John, that this is a bank coming out with confidence. He was emotional right from the top of his comment on the employees and what they've done during the crisis. And then you go into the numbers. I know we'll get into all the numbers in a ratio, but what I see here, John, is best-in-class confidence, and you really wonder how the other banks will adapt to that, including Wells Fargo. I know the CFO with us later today.
Coming up a little bit later, Tom, let's call it conservative confidence. Lisa, yes. Quite clearly the capital markets business doing well over the last quarter, but you can see where the headwinds are. They're in the consumer business, they're in interest rates as well, and they're going to be with us for quite a while.
Yeah, JP Morgan may be a port in a storm, but certainly what the results show us is that the consumer is not, and they boosted their reserves for credit losses, highlighting some of the concerns about the economy. I just want to point out that shares of JP Morgan right now, ahead of the open, up almost 4%. We're going to be getting results from Wells Fargo and Citigroup at 8 a.m. Wall Street time. We'll get more of a sense of how much of a port in a storm they will be. I'm watching that. We all are. Also at 8:30 a.m. as far as the actual data goes, we're going to get consumer price index data, which may point to actually the biggest rise in consumer prices in 7 years due to some of the energy increases. And then we're also going to be hearing from the Fed's Jim Bullard and Lael Brainard. Lots of Fed speak ahead of the blackout period next week. Interesting to see what more they potentially are willing to do to support the economy, John.
Lisa, thank you. Looking forward to catching up with Michael McKee a little bit later when we break that CPI number at 8:30 Eastern time. We have to kick things off with bank earnings on Wall Street and cross over to Bloomberg. Sonali Basak on the latest numbers. Sonali, what's the early takeaway for JP Morgan?
Pretty amazing here, because even with more than $1 billion more in loan losses than Wall Street expected, JP Morgan is also coming in with profit that's better than expected at a very tough time here. So, of course, the shares are up a little bit. JP Morgan sold off a ton. This is not 2008 for JP Morgan, and they're showing that right now. The reserve build is not too bad when you look at the corporate consumer as well. So all things holding steady, even with a tough outlook ahead.
And I know, Chanel, you've never seen this, folks, but this is the acclaimed HP 12C calculator, which is what we use when the banks report. And Chanel, here's the number, 24.3. The reserve, this is, and you're so good at this, Chanel, putting into scale how big this bank is. They took an $8.9 billion reserve, and that is 24 days of revenue, Chanel, by a quick calculation. We forget how big these banks are, don't we?
We do, and remember, JP Morgan is the biggest of the big, so they are fine. But if you look ahead, let's not get too ahead of ourselves here. We have Wells Fargo coming up in an hour and Citigroup. Wells Fargo, it's very possible. It is possible they report a loss. And if they were to report a loss, what kind of confidence does that send to the market? So you have a huge dispersion here within the banks here. So I wouldn't take JP Morgan as faith of what everyone will look like.
Shonali, just real quick here. I'm wondering whether the other banks you were expecting to see the same kind of increases on the trading revenue side.
No. JP Morgan is certainly the biggest when it comes to fixed income. That $7 billion fixed income revenue is $2 billion more than what we expected. Of course, it has TradeWeb numbers in there, so, that's a little bit better with that one-time gain, but it's still the biggest shop in town when it comes to fixed income that has been seeing a real boost here in this market.
Shonali, thank you. Great to catch up with you. We'll touch base with Shonali a little bit later in the next hour when we get the results from Wells Fargo and Citi. Bank results coming out through the week for JP Morgan and early trading firmer by 2.5% for JP Morgan in the pre-market. Let's bring in Phil Orlando, shall we? Federated Hermes Chief Equity Market Strategist. Phil, great to catch up with you, sir. Your first take, please.
Thanks for having me back.
What's your first take, Phil?
Two great data points this morning. The small business optimism index blew out at 100.6, and JP Morgan's numbers, stronger revenue, stronger earnings, despite having a larger loan loss provision. So I'd put that one in the win column.
Phil, there's a lot going on here about bulls and bears, and the constant message I've received wrapped around bank earnings is nobody loves this market. It's incredible the lack of bullish tone given the bounce and given within the pandemic. How unloved is this market?
I think it's the most unloved rally in the history of the stock market. And where we are, you've got sort of a near-term, long-term tug of war. We think the longer-term picture is quite bright in terms of getting our hands around the trajectory of illnesses and some pharmaceutical responses. But certainly in the near term, you've had a 47% rally, in the last 3 or 4 months, and we're bracing for a 45% decline in S&P earnings overall. So we actually took some chips off the table a month ago and reduced our equity overweight, which had grown to about 5.25%. We took that number down to a 2% overweight, in part going into the earnings season because we thought that second quarter GDP and corporate earnings were going to be a challenge. But JP Morgan and I think FedEx the other day have gotten us off on a good first foot.
All right. So based on what you're seeing initially on some of these earnings, are you willing to get more bullish again and put more money to work, particularly in the banking sector?
Well, we've seen 2 companies. Let's see a few more. You look at the overall earnings season. As I mentioned, consensus is looking for a 45% year-over-year decline. Our 3 favorite categories over the last 3 or 4 months have been technology, healthcare, and financials. 2 of those categories have worked. Financials have underperformed radically, and the expectation for earnings is that they're going to be down 55%.
Yeah.
Compared to the broad. So the numbers, while we've got a good number here, as you mentioned a moment ago, let's wait until we see Wells Fargo and Citibank and a couple of the other companies. There may be some disappointments down the line.
Phil, quite clearly we've got some short-term positives for the financials in America, the capital markets business. We've got some long-term negatives, the rate side of the business, the consumer part of the business as well. You've got to believe that's going to turn around or at least get incrementally better in the quarters to come. Do you believe it will, Phil?
No, absolutely. Our view is that this recession that started in February ended by the middle of the year. Now, the NBER hasn't dated yet. It might be May, it might be June. But we're expecting a pretty strong snapback in the second half of the year. We are not in the camp that the recession is going to bleed into the second half of the year.
I look, Phil Orlando, at the market up some 40%, Amazon up 90%. I know you were an initial investor in Tesla. So, Phil Orlando, you're feeling good today. But there's so many lagging sectors, including banking. What will be the catalyst to get these lagging sectors, including James Dimon's JP Morgan, to go, go, go?
So as you look at the earnings season as a whole, the companies, the sectors that will do well are going to be tech, financial, tech, healthcare, and the more defensive categories. The ones that you're mentioning, the more economically sensitive categories, including financials, are going to have horrific numbers, some of them down more than 100%. What's going to get them going forward is a safe reopening of the economy, a rolling down of this second wave of infections that we've seen over the course of the last month, and some confidence that we're making pharmaceutical progress. Now, on the antiviral front, Gilead's remdesivir put out some terrific news the other day, a 62% decline in mortalities. And it looks like we're making great progress on the vaccine front with Moderna and Pfizer, and there may be a few others. It looks like we will have a vaccine, at least for emergency use, this fall. That's all good from a confidence standpoint, and I think we'll start to get economic activity back here in the second half of the year. And I think some of the data points that we're seeing, like the Small Business Optimism Index this morning, is an important step in that direction.
Phil Orlando, thank you so much. Greatly appreciate it with Federated Hermes this morning. John Farrell, there's one number in all of this. It's been discussed. Janelle touched upon it as well. It is absolutely remarkable, given the natural disaster, John Farrell, that J.P. Morgan delivered tangible equity of 9%. Maybe it was 8%. I don't have the number in front of me right now. But for them to do high single-digit tangible equity with a GDP that's plunging 20, 30, you picked the number, John, with an unemployment rate that's published 18%. And, John, you and I know it's way, way higher. For them to nail in a 9% tangible common it's an act of God. It's just absolutely extraordinary.
Well, Tom, my take is what you just said. You picked the number. No one knows the numbers. The level of uncertainty going into the end of the year is still really, really elevated. And I think you hear that in the language of Jamie Dimon this morning. Our fortress balance sheet is a port in the storm. That storm isn't going anywhere anytime soon, Tom. That's going to be with us through to year end into 21.
Absolutely. And I mean, you see it, folks. Futures up 11. We're up single digit earlier. I think we're up 4% on J.P. Morgan. And, John, you really wonder what we're going to see then from Bank of America, the troubled Wells Fargo and all that. But as you begin the season, and, John, I'm going to go back to Pepsi-Cola, which I thought was a remarkable organic revenue growth, doing better. And this goes back to Gina Martin Adams, which is the gloom is all there. But the reality of what they're publishing is better than the gloom.
To be clear here, though, Tom, some companies will do better than others. Yes, Lisa, looking at PepsiCo, the snacks business, people staying at home, not going out. What are they buying? They're buying big, reliable names, brand names like PepsiCo, like Quaker Oats, and that's what happened yesterday with PepsiCo. For the other names that are largely exposed to this, and I'm looking at the financials for the next several quarters, we've just had a massive provision build. And a lot of that, Lisa, is guesswork. And that's what we're going to see later in the next hour as well from several other banks through the week too, trying to guess how much they need to provision for the credit loss that will materialize in the next several quarters and into next year as well.
Yeah, and it's going to be a guessing game. I do want to point out the strength that we're seeing in the capital markets business will also raise some questions about how much of a boon the government has given to these banks by virtue of some of these small business lending programs that these banks have reaped huge fees from for the investment banking side, but also on the trading volume side as people are pushed into credit, sort of the alternate side of the story, which is not so great for the economy.
And the record debt issuance that these banks have managed to monetize as well has been absolutely amazing over the last several months. From New York City this morning, good morning to you all. JP Morgan is firmer in the pre-market, up by around about 2.4%. Equity futures drifting higher by 9, up a third of 1%. Coming up later on the program, George Rusnak of Wells Fargo Private Bank, the head of investment management. That comes up later. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg Surveillance.
Now with the latest news from New York City and around the world, here's Michael Barr.
Tom, Lisa, John, thank you very much. Many hospitals in Florida are reaching their capacity from the COVID-19 pandemic. Health officials are raising the alarm for Floridians, especially after the state reported a single-day record of more than 15,000 new cases Sunday. Dr. Lillian Abo, infectious diseases specialist at the University of Miami Health System, says this situation could only get worse.
Miami is now the epicenter of the pandemic. What we were seeing in Wuhan 6 months ago, 5 months ago, now we are there.
It's primary day in Alabama. Former Attorney General Jeff Sessions is trying to win back his old Senate seat. He is up against former Auburn football coach Tommy Tuberville for the Republican nomination. The winner will face incumbent Democratic Senator Doug Jones in the fall. Southern California authorities say the body pulled from the water of a popular recreation spot is that of missing actress Naya Rivera. Ventura County Sheriff Bill Ibu says that it appears the Glee star drowned while on a boat outing with a 4-year-old son.
There are a lot of currents on the lake that appear particularly in the afternoon. We believe it was mid-afternoon when she disappeared. The idea perhaps being that the boat started drifting. It was unanchored. and that she mustered enough energy to get her son back onto the boat, but not enough to save herself.
The 33-year-old actress's son was found July 8th asleep and alone on the rented pontoon boat. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr, and this is Bloomberg.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize-change.
Influential conversation.
Should your kids go back to school? Ask Andrea. She's a teacher.
We're doing everything we can to keep the children safe and happy at school, which is why it's great that more of those who can are coming back, not only for their education, but for their overall well-being too. It gives them a routine, helps develop their social skills, and they get to see their friends too.
If your child is eligible, they should return to school. The government is working towards getting all pupils back in September. Stay alert, control the virus, save lives.
Here's to you that learned with homeschooling that your kids are smarter than you. Here's to all the self-taught banana bread bakers. And to you that rock that very questionable homemade haircut. Costa is giving £3 to everyone that missed us as much as we missed you. Get your £3 in the Costa app today and enjoy a coffee, cake, or snack on us. Come on, you earned it. Terms and conditions apply. For details, visit costa.co.uk/terms.
Picture this. Small businesses on eBay are
ploughing on, boxing up goods and rolling them out, shipping kettles,
instruments to kids,
art for walls,
treats to pets, shorts for sunny weekends,
to brighten up one British home at a time.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
We're moving back into a modification mode of our original stay-at-home order. We are now effective today, requiring all counties to close their indoor activities, their indoor operations in the following sectors: restaurants, wineries, tasting rooms, movie theaters, family entertainment centers, zoos and museums, card rooms, and the shuttering of all bars.
It is the reopening reversal from California Governor Gavin Newsom in the last 24 hours, a $3 trillion economy going in reverse. Just think about that for a moment. That's one huge state in the United States of America unwinding some of the progress of the last couple of months. From New York City this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro with equity futures just coming in a little bit. Still positive, Tom, up 8 points to the S&P 500, firmer by a third of 1%. But check out this line from the Delta leadership, Tom. Demand growth has largely stalled. That's the story of the here and now in America.
The story of the here and now, John, is we're beginning to see the data points of the last 60 days or so, you know, the middle and the backside of this horrific pandemic. We all knew they'd be bad. Some of them are a little better than the bad. But again, John, there are too many, including Delta, that frame out a most distressing guesstimate for the one headline for them: total revenue per available seat mile down 21%. John, I'm going to really be focusing on this, and officially right now I'm going to call this revenue season. Lisa, it's not about earnings, it's revenue.
Yeah, I agree, and I would go even further. We were seeing some real sequential growth, Lisa, and now what are we seeing? We're seeing it roll over. We're seeing it stall out, and that's what you see in Delta Airlines. And I know this is an airline business, which is increasingly difficult, but this is really a reflection of how much things have softened over the last month, given what's happened across the Sun Belt.
Delta revenue has dropped 91% in the 3 months through June. Who's traveling? I mean, that's the question. We're not traveling from businesses. Consumers can't travel to a lot of states. The question is, when can it revive, given the spread in viruses, John?
The big issue, Tom Keene, going into November, can this administration engineer some kind of recovery to campaign on? Because right now that recovery is stalling out.
You're dead wrong, John, like you were. You thought Arsenal would beat Tottenham. You were wrong on that, and you're wrong on this as well. It's not about November. It's about getting to the final week of July. Kevin Cirilli is the only one left in Washington. Everyone else is home. He's our chief Washington correspondent. Kevin, I'm sorry. These kind of stories from Mr. Diamond, the ones from Delta as well, the many more to come, signal an exceptional urgency to a July meeting of the minds on our fiscal package.
And I would argue it's not just big business, but it's also Main Street that is really needing that type of liquidity, but also that cash yesterday, really. And that's really the pressure. You know, when I spoke to Congressman Fred Chill, a Republican from Arkansas, just last week, he said that really the bottom line ahead of the next round of economic stimulus is going to try to be to make sure that the funds that are available are more rapidly dispensed into the economy, and trying to come up with solutions to really micro-target these smaller businesses to make sure that they have the cash that they need to keep their businesses open. But lumped into this broader debate, whether it's manufacturing, whether it's education, is really this desire to get this across the finish line before the August recess. The president has put a $1 trillion price tag on this bill, but I can tell you, based upon conversations that I've had just within the last 24 hours with Democrats, they want to see much more money allocated this round.
Let's go right there, because Greg Villiers highlighted that in an important paragraph this morning. We're talking $1 trillion. Others are saying 1.5. The Democrats want $3 trillion. And the new number, Kevin, is this is all in a backdrop of a potential $4 trillion deficit. Does any of that funny numbers, does that matter to the people in Washington? Or let me guess, it's just about getting reelected?
Well, two things. First and foremost, Greg is spot on in terms of and in his note, he really points out and highlights the discrepancies between and really the light years apart that Republicans and Democrats are on right now. But it also alludes to the notion of Republicans very uneasy with spending more money. But the second point here is that, look, there's been some economists in the economic echo chamber that have suggested that the U.S. has been able to not suffer as greatly economically because of the funds that were spent so quickly and during the rounds of economic stimulus. But there's another thing here that we have to talk about. Yeah. We are rightfully focused, Jonathan, on the August recess deadline, but there could be another round of stimulus come the fall before the election.
There could be, and Kevin, you make a good point. It's 3-month Band-Aid after 3-month Band-Aid. Tom, the outcome's more important than the incentive, but the incentive, let's think about it. If it is about getting re-elected, let's hope they realise that to get re-elected, they're going to have to do more. There is a real risk here of hitting an air pocket of demand in the back half of the summer. Well, you see it already playing out, Tom.
Okay, I totally agree, but Kevin Cirilli, what was the significance of the California announcements in the last 12 to 16 hours? Overlay these micro-state announcements on the ballet in Washington.
Well, I think the markets have readjusted in terms of looking at hospital beds as opposed to looking at headlines and chyrons. And I think that's really kind of where we're going here. It's one thing to look at it as a failure of leadership, but it's another perspective to take to say, you know what, it's actually tracking the data, following the data, and understanding the spread of the virus. The spread of if you use the analogy of a weather storm, if there's a lot of snow on the roads, people aren't going to leave. You got to wait till it melts until the roads are cleaned up. We're in this virus pandemic weather storm model until there's a vaccine.
Kevin Cerruti down in Washington, D.C. Thank you. Let's tie it all together. JP Morgan out around about 40 minutes or so ago. How many of these loans of people that have borrowed from banks like JP Morgan have been supported by the amount of money that's been pushed out from Washington, D.C.? The fiscal stimulus, the checks to Americans, the enhanced unemployment benefits. How many Americans have received that money and been able to continue meeting their debt repayments? That is a huge, huge issue for these banks. When you come out with the estimate of credit loss provisions and all of this stuff and try to project out the next several quarters, Lisa, there's got to be a decent understanding of what the fiscal help's going to be, because unemployment is still going to be elevated going into the new year.
It's a fantastic point. I mean, think about mortgage delinquencies. About 10% of mortgage holders evidently were delinquent over the past couple of months. That is with the enhanced unemployment benefits. That is with all of the support that's been doled out. What if that subsides? Meanwhile, we have companies that have been pushed into the debt capital markets, raising more than $1 trillion of investment-grade debt. We were just talking about this, John. I mean, that's been really a big help in terms of the capital markets business. How much longer can they keep doing that, John?
And Tom, to build on Lisa's point, quite clearly, these banks have had a massive helping hand over the last quarter or so. And I know it's been a difficult time. It's been a difficult time for everyone. But if you really think about it, how many of these banks have received loan repayments they wouldn't otherwise have received if it wasn't for the fiscal help we've had over the last couple of months?
No question about it. And again, John, the theory of that goes back to Ben Bernanke. I believe it was at Princeton years ago, where the integrity of the financial system is the only way to allow the rest of the system to heal. Now the question is, how do we get in the midst of this pandemic the rest of the system to heal? And I'll tell you, after the California, LA, San Diego announcements yesterday, the jury's really out.
Here in New York, Tom, looking at the price action, futures still up around about 10 points at the S&P 500, drifting higher by 1/3%. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. This is Bloomberg Surveillance.
The following is a message from PGIM.
Welcome to Outsea in 60, Perspectives from PGIM Thought Leaders. Here's Mark Barabo, the head of global equity at Jennison Associates.
You're looking at bigger implications of technology playing a role in keeping us all connected, giving us access to information or goods very quickly. So we don't see any of those trends changing. In fact, they're likely to accelerate. There's some new things that have come along, though, that people might find useful, like telemedicine. There were skeptics about that, and I think the more people using it, especially the more doctors are using it today, the more they're liking it. You can see more patients. It can be more effective. It might actually be a better solution.
Hear more PGIM perspectives at pgim.com. That's pgim.com. Partner with PGIM, the investment management business of Prudential. These statements are not intended to be investment advice and should not be used as the basis for any investment decision.
Elite advisory firms rely on BNY Mellon's Pershing to meet the needs of their most complex clients. Karen Novak, Chief Operating Officer at Pershing Advisor Solutions, explains how.
At BNY Mellon's Pershing, we bring customized insights and strategies to help you grow your advisory business and stay on the leading edge. We can support the needs of your most sophisticated clients with a full range of investment and wealth management solutions, from access to private banking to consolidated bank and brokerage custody. Learn why so many of the largest advisory firms turn to us for the financial strength and high-touch service that BNY Mellon's Pershing can provide. Are you well positioned to stand out from your competition?
Learn more at Pershing.com or call 800-445-4467. Brokerage custody provided by Pershing LLC and other services provided by Pershing Advisor Solutions LLC. Both members of FINRA and SIPC. Private banking and bank custody provided by BNY Mellon N.A. Member FDIC.
This is a Bloomberg. Decisions. Clearing. Isn't it great?
So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Tuesday afternoon by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
What have you missed the most? A haircut? A visit to the shops?
Oh, you look lovely in that.
What about a nice lunch?
Fish and chips, please.
Salt and vinegar with that. Or an afternoon in a pub garden? Fancy a casual bike ride? Or perhaps something a little more intense? Or maybe you want a relaxing day out. Whatever you've missed, get out there and enjoy it again safely. Find out how at gov.uk/enjoy summer safely.
Times Radio, an exciting new national speech station, is here.
Featuring live news,
analysis, conversation,
and the unequivocal world-beating journalism of The Times.
Join Asma Mir and me, Stig Abel.
I'm John Pienaar. Join me on Times Radio.
Join me, Mariella Frostrup.
I'm Giles Corrin.
Hello, I'm Kathy Newman.
This is Michael Portillo.
Join me, Carol Walker.
I'm Hugo Rifkind.
Times Radio is here.
Search Times Radio on TuneIn to listen.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg TV and radio alongside Tom Keene, together with Lisa Bravitz. I'm Jonathan Ferro. 2 hours away from the opening bell as we kick off earnings season here in New York with JP Morgan earnings. Citi Wells Fargo coming up a little bit later. In your equity market right now, up 13 on the S&P 500, positive 0.4%. The last 24 hours really interesting. As soon as you test the post-COVID highs, we roll over. Then California, the news out of California, pushing us lower even more so. In the bond market, yields just a little bit higher, up a single basis point on 10s to 0.63%. And there it is again. On a key week for Europe, strong euro. Euro dollar 113.76, up 1/3%, Tom Keene. Big week coming up in the back half of the week for the continent.
And I note correlated safe haven retreat, John Farrow. You've got gold under $1,800 the ounce off the GC1 pricing $17.98 on gold, down $17. And I'd even note Euro Swissy, which has been quiet, Swiss franc weaker against the euro, another one of the global tea leaves. He's in charge of tea leaves at Wells Fargo Private Bank, head of all their investment management research with a huge fixed income perspective. George Rusnak joins us right now. George, it's real simple. I looked at the UK 2-year yield today, and I couldn't go logarithmic because it's a negative yield, but the math is real simple. It is a persistent trend. How grinding is this bond market, and does it indicate for you that the U.S. 10-year yield could grind ever lower?
It could grind lower here. We've been in a range here for quite a while, Tom. So since June 5th, where we hit roughly 89 basis points, we've been sort of this 60 to 75 basis point range for the last month or so. We think it's going to probably stay in that range. Unfortunately, though, over the longer term, we do think it might trend a little bit higher. And a little bit higher is only 10, 20 basis points. But quite frankly, Tom, a 10 basis point move higher in 10-year rates is a negative 1.2% return for investors here. So that's the challenge that investors are facing right now, is that they're just really, with yields so low, they actually just a small backup can cause a pretty significant negative yield and negative return for clients.
George, it's been fascinating to see what happens at the front end, but of course the front end is hypersensitive to expectations about the policy rate. What's been more interesting for me is what's happening down the longer end. Bob Michael at JP Morgan thinks that here in the United States we can converge down towards the policy rate on a 10-year maturity in the Treasury market. And to be clear, we're not far off those levels. Do you think that can happen, George?
It's feasible, John. We don't think necessarily that's going to happen. That's not our base case scenario. It's feasible, though. And certainly what's happening here domestically is we're catching up to international, what we're seeing overseas in Europe and Japan. And that's actually not a good thing for us. So we actually like the fact that the yield curve has actually widened a little bit, and more specifically has steepened a little bit. That's something that's a healthy thing for the economy. That is part of our base case forecast that continues. And again, though, I think the key here is that it's going to be gradual. And I think the other key of why that's potentially going to happen, John, is the idea of the issuance that's coming out. That was well absorbed last week's issuance. But going forward, it remains to be seen if that's going to happen. And the Fed's actually going to have to step in here from a quantitative easing perspective to pick up on that, to stave off any kind of rate tantrum that you could get if you don't see them step in here.
George, typically when benchmark government yields are this low, that is negative for the economy. Certainly we see a lot of dark clouds out there for the economic recovery, and yet a lot of people going further into risk with a preference even increasingly for high yield over investment grade. Why is this a good time to take credit risk at a time of so much skepticism about the recovery being expressed in government debt markets?
It's a great question, Lisa, and we're actually in that camp as well, believe it or not. We've been stepping into high yield a little bit. We're neutral on it overall right now. We're looking for opportunities to take on credit risk, and the reason why is right now you're actually getting compensated to take that risk. So in the past, you had such tight spreads, there were no opportunities to do that. Even if default rates pick up just a little bit here, you're getting compensated. 6.5% type yields and high yield, you're looking at a 580 type of spread. Historically, that's a good opportunity to get into that. Even if it seems like a challenging time to get into it, we think over the long haul, those returns will offset any kind of volatility that you're going to see, any kind of defaults that you're going to see. We think it's a good opportunity. Investment-grade corporates, high-yield corporates, preferreds, step into that risk. We think from an income perspective, there's just such a dearth of income out there that you're going to see a lot of demand coming into that, and that's going to support those levels despite some of the challenges that they might see financially.
The spread, you're saying, sufficient to absorb the bankruptcies and the losses that are expected. Right now, we're seeing the highest default rate among U.S. high-yield debt in 10 years, with it expected to go even higher. What kind of default rate is your analysis pricing in to make the 5.8 percentage point yield cushion worth it?
Right now, default rates are roughly between 5 and 8%. Even if you go up to that 8% level, we still think it makes sense to stay within high yield right now. You have to leg in. You have to be in there over the long term, and you're getting compensated. Look, if you look at where else you go in the market, and this is a challenge that every client is facing right now. Pre-COVID, for fixed income, you could count on getting two things. You could count on getting good income and an offset to your risk portfolio. Going forward, you're going to have to choose one or the other. You're going to have to choose either the income component, but you're not going to get the risk offset, or you're going to have to choose the risk offset, which is treasuries, agencies, asset-backed mortgages, but you're not going to get the income. We actually think going for the income right here is making sense. And we think that actually more and more investors are going to be doing that, and will support the high-yield market.
George, the backdrop here is a new statistic, and Greg Valliere published it today, but many others have talked about it as well. It's all a lot of bond analysis against what appears to be $4 trillion of national debt. That's the new statistic, not $2 trillion, not $3 trillion, $4 trillion. What do you say to Wells Fargo clients who say, wait a minute, there's $4 trillion out there. That's a number we've never perceived.
It's scary, Tom. The amount of debt that we're taking on is very significant. The amount of stimulus that you're seeing in the marketplace is something that we haven't really seen before. The 2008 crisis, you saw roughly $340 trillion in fiscal stimulus over a 2-year time frame. You're going to see $2 trillion over a 180-day period in this, so 6 times as much in stimulus. And you're right, that's a huge debt burden, and that's going to cause challenges for us for time to come. But the reality is we need it. We need it right now. When you stop the economy, when you slow it down as significantly as you do, and you have the pandemic, this is the time to be adding the fiscal stimulus. So we're doing the right thing, both on the fiscal side and the monetary side. It's scary over the long term, but for the short term, we really need that to jumpstart the economy. And over the long term, we're going to have to work for ways to pay that down.
Well, over a long term, I mean, can we do this with stability? I mean, not only stability in the bond world, your world, but also Scott Wren's world, the equity world as well. Do you see this as a stable process, or are we going to have some volatility out there?
Yeah, we do think more of the volatility. Again, resilience is one of the key themes that we've talked about. Yeah, that's what we've talked about over both over our mid-year, and the idea that, yes, there's a path back, but that path might be quite a bumpy one. And so you're going to see that within the stock market. Obviously, though, We do still see sort of a neutral positioning. We're slightly favored towards equities. We do think there's some good growth out there.
Yeah.
And we're roughly forecasting about a 3% growth between now and year end.
George, I've got to wrap up this conversation with a question that basically addressed the only thing that I think people like Lisa Abramowitz, Michael McKee and Molly Smith would be following, which is waste management. 2024 debt bought by the Federal Reserve, $3 million worth at about 105 cents on the dollar. It's just been redeemed at 101 cents. That's a loss for the Federal Reserve. Do central bank losses matter?
I think right now in the short term, they need to support stability. They need to support liquidity within the marketplace, and they're going to have some losses, unfortunately. Over the long term, I think they'll be in good shape. But I think you're right. Over the short term, there's going to be some bumpiness there, John, and they're going to have to absorb that in order to get back to a more liquid, well operating market. And quite frankly, John, they've done a good job over the short term.
Yeah.
And we think over the long term, things will pan out fine.
George Rusnak of Wells Fargo Private Bank. George, always great to catch up with you. Lisa, I knew that you would love this one. A $120,000 loss for the Federal Reserve.
And to be very clear, I don't love that the Federal Reserve suffered a loss.
Don't
That's
you?
not what that's not what I love about this story. Let's just be very clear about this, John, for all of the viewers. What I do think is fascinating about this story is how it highlights how different corporate debt markets are from Treasury markets. And the idea that the Federal Reserve is coming in and buying in the primary market, buying directly from the banks, from the syndicate, in order to support this market. They are subject to the whims of a market that is traditionally over-the-counter, not done electronically, John. And what that means is potential losses right off the bat.
Tom Keene, absolutely unbelievable to see how this is playing out. They are a price-insensitive buyer, which will lead to some trouble at some point. I don't know how you define trouble, though, for a central bank with an infinite balance sheet.
Infinite's the key word there, and that makes them. Where does this word come from, John? Everything's resilient right now. It's a resilient Fred with an infinite and resilient balance sheet.
I think that's what you say, Tom, when you're facing a little bit of trouble. There's trouble out there, we acknowledge that, but I'm resilient to it. We can get to the other side. Are you resilient? Do you feel resilient?
I feel resilient today.
Are the tots resilient?
Yeah.
You want to encourage this right now?
I can't help myself.
Don't encourage it.
The tots are so... The only thing good about the tots is they're not being relegated. It took me 2 years, folks, to figure out what relegated means.
You've worked it out now, and I'm really proud of you. 2-3 years into the program. The price action shaping up as follows, Tom.
Do a
up
resilient
13 points on the S&P 500, up 0.4%. We add some weight to it. JP Morgan firmer in the pre-market, Tom, by around about 2 percentage points or so. The level of uncertainty, Tom, and these companies still can't really provide us with any real clarity, guidance about the year ahead. That's going to be the takeaway from earnings season. Who can provide any forward guidance? Nobody can.
And buried in the JP Morgan release, and I thank them for their clarity, it's really best in class, is they're not even talking share buybacks until Q3. So that's that uncertainty out there. Is when can they really reinstitute use of cash? It's not there right now.
Well, the regulator's not happy about it either, but I think one takeaway, Lisa, for the banks is they've got ahead of a lot of that with the regulator. They suspended the buybacks before the regulator did. They're getting ahead of the credit loss provisions as well. They've actually been really conservative throughout all of this, not trying to get over their skis in any way, shape or form.
JP Morgan has been the port in the storm, not as much Wells Fargo. And really what I'm looking for at 8 a.m. is whether they're going to cut their dividend to zero. A lot of people wondering how much they're going to cut the dividend after the stress test by the Federal Reserve. That's going to be more where the questions are. JP Morgan is the fortress, is the behemoth, and they remain that way.
That sounds like some marketing language from the CEO, Jamie Dimon.
Well, I mean, but it's true. Can you say it's not true?
The stock's still down about 30% year to date.
But is it not true?
I think Amazon's been the port of the storm, hasn't it, through the year so far, no?
Well, I mean, look, in terms of stock performance, yes. In terms of which bank is most able to weather the downturn in the potential cycle, I mean, JP Morgan is gaining some scope and strength, no?
We'll give you that. Lisa Abramowitz with Tom Keene. I'm Jonathan Ferro, and your equity market up 14 on the S&P 500, advancing 0.4%. Up later, David Bianco, DWS America's Chief Investment Officer from New York City this morning. Good morning. This is Bloomberg.
Now with the latest news from New York City and around the world, here's Michael Barr.
Tom, Lisa, John, thank you very much. With COVID-19 rates rising in California, the state is locking back down under new orders. Bars and movie theaters are closed again. In many areas, gyms, churches, hair salons, barbershops, and indoor malls are being ordered shut down. The nation's second largest school district will start the new school year with online-only instruction. Los Angeles Mayor Eric Garcetti.
The Los Angeles Unified School District announced that the fall semester will begin where the last one let off, with distance learning. That students will not attend classes in person. I support this decision because we must prevent gatherings and should only open when it is safe for our students, our staff, our teachers, and our families.
Vice President Mike Pence told U.S. governors that the administration would back them on any measures to contain the coronavirus pandemic as 13 states reached an alarming rate of positive tests. On a conference call, Pence said those states have rates of higher than 10%, according to a person who listened to the private session and requested anonymity to discuss it. The vice president has consistently argued that the administration's response has been vigorous. The person also says Pence made clear the situation has become grave. A Republican primary runoff in Alabama today appears to be a contest over who is more loyal to President Trump. Former Attorney General Jeff Sessions faces former Auburn football coach Tommy Tuberville. The winner will face incumbent Democrat Doug Jones in the fall. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr, and this is Bloomberg. With a Bloomberg Business of Sports report, I'm Michael Barr. Under mounting pressure from sponsors and retailers, Washington's NFL team said it will no longer be known as the Redskins, an offensive term for Native Americans. The club began a review of the name July 3rd, and according to a team statement, will be retiring the Redskins name and logo upon completion of this review. The principal owner, Dan Schneider, and Ron Rivera, head coach, are working to develop a new name and design approach. It's a stark reversal by Schneider, who for years refused to even entertain the possibility. As recently as 2013, when the franchise was defending its name in court, Schneider said, "We'll never change the name. It's that simple." The Atlanta Braves said in an email to season ticket holders that they will not be changing their nickname. According to ESPN, the MLB team will take a further look at the future of the tomahawk chop. And that is a Bloomberg Business of Sports report. I'm Michael Barr.
Jenny Liss, Jewish communal leader and philanthropist, talks about why she chose the Jewish Communal Fund for her family's charitable giving.
For a lot of people, it would be the convenience factor. I don't have to track anything.
If charitable giving is an important part of your life, JCF can help you organize your philanthropy with our donor-advised fund. A fund can be established with a minimum tax-deductible contribution of $5,000. Make grants to your favorite charities, and JCF handles all the administration and reporting.
At the year end, our board awards community grants from fees and endowment income to UJ's annual campaign. We also make gifts to specific organizations, the elderly, Holocaust survivors, the hungry. The fact that we come together as a community at the end of the year to build community, that's what makes us different.
Get better at giving back. To find out more about JCF's impact, visit jcfny.org and download the Giving Report. JCF, we have a gift for giving.
Global News 24.
How do we control coronavirus now? Listen to Steph. She's a bus driver.
Now that people are using public transport again, we really need to make sure that we keep each other safe. Passengers need to stay 2 meters apart. If that's not possible, make it at least 1 meter. I want to see everyone wearing face coverings over their mouth and nose unless you've got a good reason not to. And when you get to where you're going, you need to wash your hands. We've still got to play our part.
Stay alert. Control the virus. Save lives.
Decisions, decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Tuesday afternoon by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
Eurotunnel Le Shuttle is a safer way to get to France and beyond, with social distancing built in. There's no scrum at security, hanging around for your bags, or shouldering strangers in your seat. With Eurotunnel Le Shuttle, simply drive on at Folkestone and stay in your car, comfortably. Then drive off 35 minutes later. Stay safe. Go Tunnel, Eurotunnel Le Shuttle, a safer way to France and beyond.
virus remains public enemy number one. But the actions of many governments and people do not reflect of this. The only aim of the virus is to find people to infect. Mixed messages from leaders are undermining the most critical ingredient of any response.
That was the WHO Director General there on leadership worldwide. From New York City this morning, good morning. Tom Keene, this is a story that has been building for quite a while. The era of sitting on the fence is over. You now have to pick a side. The United States has been unhappy about the use of Huawei and 5G networks, or at least looking to use Huawei and 5G networks for decades to come. And the UK has made the decision. That decision as follows: to ban Huawei from 5G networks in 2 stages from the end of 2020. And Tom, this is going to take a while. Let's be clear on this. All Huawei 5G must be removed from networks by 2027. It's going to take a while, but the UK has had a bit of a reversal in the last 6 months.
Yeah, I'll say a huge bit of reversal. And to the comments made at the floor of the House of Commons, John, these are sweeping announcements by the Johnson government. What I find most interesting, John, is there been any evidence that they've been spying? I mean, there's evidence of funding by the government. I get all that. Forbes had that. Bloomberg's had that as well. But, John, have we really seen... Can anyone say that they've seen them spying on a cell phone?
I can say this, Tom. I can't say I have. I think the intelligence communities of some of these governments might say something a little bit different. Yeah. Tom Keene, if that question was brought up. Should we get you to Wells Fargo news? Just crossing across the Bloomberg here, Tom Keene. Wells Fargo to cut the quarterly dividend to 10 cents a share from 51 cents. The estimate was 20 cents, reporting first quarterly loss since 2008. Lisa Abramowitz, the headlines just dripping across the Bloomberg terminal this morning.
Yeah, worst performance since 2008, really highlighting some of the weakness and how perhaps JP Morgan's strength really was not indicative of what to expect from banks across the board. Wells Fargo viewed to be in the weakest position with respect to the stress tests among the biggest U.S. banks. But really interesting, John, to see the estimate loss per share, 66 cents versus the estimate of 13 cents.
And here's the guidance, Tom. Just listen to the language here. The view of the length and severity of the downturn has deteriorated. That is the conclusion that many people would draw, looking at how things are playing out right now.
Why is that any different from Delta Airlines 40 minutes ago or whenever it was?
It's not, Tom. It's one in line. It's the same story, that we are stalling. This recovery is stalling. And if you had a thought about how long this pandemic would last, how long this episode of economic weakness would last, over the last couple of months, I think you've got to push that out once again.
That's a very careful headline. I want to review 2 words before we go to Max Neeson, and that's, John, the view of the length, the timeline here, much like the Goldman Sachs ramping out of 10 days ago or so, and also the severity of the downturn, the magnitude, if you will, of what we're going to see. Let's do that and move on to the pandemic. Max Neeson joins us with Bloomberg Opinion, our wonderful columnist on this horrific event. What is the magnitude of the pandemic right now, Max Neeson?
It's quite severe with the locus, the nexus very much being the Americas, the United States, South America, and very much continuing to expand. There's not much that's good to say about the trajectory at the moment. May finally get some signs that, states beginning to take it more seriously with the announcement that California is substantially rolling back activity. But the broader context of that is that it's doing it based on numbers that are on a per capita basis and for test positivity that are actually less concerning than states like Texas and Florida that have not taken as acute of action. So a story that's likely to continue of an outbreak, an epidemic that's growing in severity rather than going the direction you'd like to see.
Max, we are seeing the death rate starting to tick up a little bit, but it still is far below where it was in New York and some of the other states that were hit earlier. What can we draw from that? I mean, do we get the sense that the remedies are just so much better that the mortality rate really isn't what it was initially in the pandemic?
Sure. Death rates are a complicated story and one that I'm fascinated by. I think the most important thing to point out is that most of that delay, a lot of it is just pure data lag. It's that, the real upsurge in cases was close enough that you wouldn't expect to see quite as many deaths. The second is that this current moment is fundamentally different than the initial wave in the spring in New York, especially. where the virus was spreading, completely unimpeded, without extra precautions for people that we now know to be more vulnerable. But I do expect that the rate of change, the uptick in the death rates will be less steep and not quite equivalent to what we saw in New York for that reason and because of improvements in therapeutics. Yeah. But unfortunately, the reasons that the death rate might be lower, that's something you can't take for granted. It's not something that's going to last. If you keep adding this many cases, you begin to lose the ability to protect more vulnerable people when you have a certain amount of spread in the community. You lose that benefit of having hospitals that aren't as overwhelmed, and any benefit of treatment sort of drops when you have less ability to treat people in the best way possible, which is what happens when you get a sufficient number of cases in concentrated areas. Yeah. Something that's beginning to happen.
Max, there was a survey recently of high-yield debt investors that showed that more than half of them believe that there will be a vaccine available for emergency use by the first quarter of next year. Based on the science and the developments, is that realistic?
It's about the soonest that you might expect one. But the question that you have to also take into account is it's not just whether you have a vaccine, it's what vaccine you have and how much of it and how well is it rolled out. So the situation where you have a broadly available, lots of stock of a particularly effective vaccine, one that's rolled out more effectively than you're counting on a government that hasn't managed the pandemic well to now do a really good job at an extremely complicated logistical task. So there's also an outcome where it's a vaccine that's, protects against severe disease but doesn't halt transmission and extract, and one that there's not that much available and the rollout is slow. So you have to sort of evaluate what you mean by vaccine available. Emergency use authorization doesn't translate to immediate bend in the pandemic or in the economy. So you just have to be careful and watch the data and make the evaluation based on that as opposed to your sort of highest hopes of what a vaccine might be. We really just don't know and won't know until we get large-scale clinical trial data, which, those trials haven't started. So a long ways to go.
Hey, Max, great to catch up with you. Max Neeson, Bloomberg Opinion columnist on the latest vaccine effort. The struggle to normalize without a vaccine continues. We see that playing out in California in the last 24 hours, reversing the reopening in California, seeing similar things happen across the Sun Belt and elsewhere around the world. In your equity market right now, we advanced by 0.5% on the S&P 500. Tom, just quickly, fortress balance sheet over at JP Morgan. Okay, Wells Fargo talking about liquidity continues to be extremely strong. Those sentences speak to the difficulty of this moment that we remain in July of 2020.
There's no question you can go from the balance sheet over to the income statement. The first thing I looked at with Wells Fargo, just to get a sense of the business, John, was a decline in revenue. It's substantial, but again, there's some great liquidity.
Up next, David Bianco of DWS Americas from New York. This is Bloomberg.
Hey, y'all, Jeff Foxworthy here.
Now, how do we control coronavirus now? Listen to Claudia. She's a care worker.
I got the call from NHS Test and Trace. Told I'd been in contact with someone with coronavirus. Couldn't believe it. I had to isolate at home for 14 days. Couldn't go to work, couldn't go to the shops, couldn't get out to exercise. I didn't even feel ill. But you know what? To protect my family, my friends, my community, well, you just do it, don't you?
Stay alert, control the virus, save lives.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Tuesday afternoon by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
From all of us at Thames Water, thank you for supporting our key workers. As the weather warms up, demand for our water is growing, so we need your help more than ever. From taking shorter showers to turning off your sprinklers, you can make every drop count, inside and outside your home, to keep taps flowing in your community. Just don't forget to keep washing your hands regularly in line with government advice. Be an H2O hero. Find out how at thameswater.co.uk/watersmart.
Did you know that with TuneIn's local radio feature, you can stream live FM and AM stations broadcasting in your area? Discover local news, talk, and music stations. Navigate to the local radio section under Browse to listen locally on TuneIn.
To help keep you and your loved ones safe, TuneIn has the latest guidelines from the CDC. Outdoor activities, wash your hands and don't touch your face. Stay at least 6 feet from people you don't live with. Wear a mask. Avoid shared surfaces like swings or benches. For the latest stories and updates on COVID-19, search Coronavirus News on TuneIn.
I bet football can make you feel nostalgic?
Playing days are over, so...
On the podcast, NFL Alumni Lounge, Charlie Booth sits down with retired NFL legends to talk about their careers, life after football, and everything in between.
Mr. Darren Waller, good to have you.
Yes, sir. It's good to be here.
Dana White, welcome to the Alumni Lounge.
Thanks for having me, brother.
Big member of our NFL alumni family, the CEO of the XFL, Mr. Oliver Luck.
Charlie, good to see you. Thanks for having me.
We're here with the president, Mr. Eric Price. Good to see you.
Search NFL Alumni Lounge on TuneIn to listen.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be...
Let's get now to our guest joining us from Bangkok. She joins us on the phone from the Hudson Valley.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com.
What does that moral leadership look like to you?
Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at Bloomberg Quick Take. This is Bloomberg Radio.
A lot of businesses are not buying into the V. They see a different destination regardless of the journey.
The fact is we are likely facing a slower growth, a sluggish economy as we do recover out of this, and that is a great backdrop for secular growth.
The stock market is missing this point. This is not a balance sheet recession.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Thrilled you're with us. Bloomberg Surveillance. It is an exceptionally busy morning. It's the
calls bank earnings season to great derby, but let's just get to the numbers.
Citigroup right now, John. What do you see?
Second quarter fixed sales and trading revenue, $5. The estimate, $4.59 billion, slightly firmer than expected, Tom, though I should caution the range of estimates coming into this from analysts for many of these banks really, really wide. That's the fixed sales and trading revenue number. Here's the equity number. It comes in just a little bit lighter, Tom, on equity. Yeah. Equity sales and trading revenue, $770 million. The estimate, $930.1. Here's managing the message from the Citi CEO, Mr. Corbett. Overall earnings issue for the time being. The balance sheet is still strong.
I'm going to look at the cost of credit, as they say. Every bank has different language, folks, of $7.9 billion. Maybe the math is 9 plus 9 plus 7, whatever that is, $20-some billion of cost of credit across the three banks this morning. And Citigroup, like J.P. Morgan, lifting a little bit, and Wells Fargo is its own story. Let's do this before we get to David Bianco and some good conversation on the broader market. And, of course, the China story John's really focused on as well. Shonali Basak joins us now, Wall Street correspondent. Shonali, we got Citigroup out here now, but I want to go back to Wells Fargo. How broken is Wells Fargo?
They just posted a $2.4 billion loss, Tom. That is a gigantic loss to post. And the dividend is being cut down to 10 cents. That was compared to 20-cent expectation, 21-cent expectation, and 51 cents is where it was before. So that should just tell you they're putting up a fraction of what they had before at a time where they're following J.P. Morgan with relatively stable, solid results, really in the face of a tough time.
Shonali, three banks, Wells, Citi, and J.P. Morgan as well. Is there a broad takeaway yet for all three?
it's tough because the broad takeaway is uncertainty. You don't know what's coming next yet. JP Morgan was able to show the consumer was all right. Even with people in forbearance periods, a lot of people were paying back their loans. And that was a good sign. Is the same true for Citigroup? I don't know.
Very good. Sonali Basak, thank you so much. John Farrell, what's your summary of these three bank earnings before we get to David Bianco?
Funny enough, I'll give you, Tom, I actually think what you said was fairly spot on, that JP Morgan was a win, that Wells Fargo was a loss, and Citigroup was some kind of draw. So I forgive you for the top of the programme because I actually think you were right. I'm not going to say that again for the rest of this quarter. I guarantee that. That's actually a decent way of summarising it, okay?
My mascara is running.
Move on,
folks.
We'll
move on. David Bianco's going, this family's dysfunctional. Mr. Bianco's with DWS Americas, and he joins us now with investment perspective. David Bianco, Benjamin Bernanke's core theory was the financial system in any crisis must stay sound. Is the American financial system sound today?
Yes, Tom, good morning. It is sound. There are challenges, but it's sound. And last recession, the banks were very much the patient. This time, they are a medic. They are responding to the crisis. They're helping facilitate many federal programs. They are still providing credit. Their earnings are under a lot of pressure. And although they're not the epicenter of this recession in terms of being part of the cause, they are still suffering quite a bit of the brunt. And the loan loss provisions, which we saw in the first quarter and there'll be more to come, that is hitting the earnings, as you see this morning. The big banks are getting through it, in part because of fees from other capital markets-oriented businesses that they have. But it's not easy for these big banks. They are making their contribution to absorbing the costs of this pandemic that society is suffering. But it's good to be a big bank. And I think as the earnings season goes on, you'll see that the challenges to smaller banks that are more dependent on that typical net interest income margin, that's even tougher, and it's going to stay tough in this zero interest rate environment as far as the eye can see.
The implication in your comments perhaps is consolidation, if not in actual purchases of smaller banks in market share. And does this mean, from your perspective, you want to buy the JP Morgans of the world? You want to buy the strongest U.S. banks right now, given their beaten up valuations and given the scope for their consolidation of market share going forward?
Within the banks, biggest is best. A lot of people are moving the debate to should they own big banks versus super cap tech. I think the portfolio should have at least equal weights, probably in both at this stage, to bring a little bit more balance between this growth versus value dynamic that's been so extreme. Consolidation amongst the banks, the regulators would have to approve it, endorse it. Hopefully we don't have.
Okay, guys, I'm placing a new order for Japanese yen. The order placed to buy yen at 107.360. So new order placed to buy at 107.360. Okay.
And call it developed world markets, China. Where do we stand now with this tension to China, and how will that impinge on markets?
At DWS, we've been pretty bullish on China for quite some time. We recognize the country has its challenges, return on capital, many other types of progress that it's making as becoming not just a developed country, but a leader in the world economy. There's this tension between the United States and China, which is an understatement, which begs the question, should U.S. investors be investing in China? We monitor this, but our answer is yes. Our answer is whether it be investing in a currency that looks like it's going to be one of the world's more important currencies over the long term, in companies and an economy that we think is an important part of the global economy. For the longest time, we would simply argue, just go buy China tech stocks, this rise of Eastern tech. Not just the Western tech companies, these Eastern tech companies, You know who they are. They're behemoths. They've performed just as well as our behemoth tech names. But at a time like this, where the China economy is bouncing better since the virus and showing signs of its ability to grow, maybe at a slower pace, but grow, if you're looking for value stocks, beyond technology, we would point you in the direction of China. Maybe first their consumer and their healthcare stocks. Dare I say that even their financials, their banks, I want to make it a big part of the portfolio, but I think the currency and the interest rate environment in Asia being better than in the Western world, Chinese stocks belong in the portfolio.
David, I think what people struggle with is every single morning we could write the same headline, tensions rising between the United States and China. It's almost become a joke, except it isn't. You see the news out of the UK this morning, essentially kicking out Huawei over the next several years towards the back end of the decade. You see what's happening in the South China Sea. Once again, that's become an issue, a much bigger issue in the last 24 hours. David, no one knows what to do with that story anymore. What do you do with it?
Well, a lot of these big macro pictures, we try to think about how to invest through them, around them, try to keep perspective on what really matters to the stocks. Are you comfortable with the currency? Are you comfortable with the business? Are you comfortable with the valuation? And in those simple questions, we are, and that's why China stocks are in the portfolio. And I think as time goes on, as people think about maybe MSCI EFA being a crucial part of an equity portfolio, I think Asia ex-Japan is going to become an equally important and strategic weight in U.S. investors' equity portfolios. But look, as you said, John, unfortunately, it's not a joke. It is real. There's a lot of tension between the U.S. and China about the way the world should be run and elements of individualism and the country surrounding China. And look, this is something that won't go away post the U.S. election. This is not a political issue. I think the United States, both sides of the aisle, see the tension with China and have different ideas about how to deal with it. But this tension between the U.S. and China is real. It's not going away. As long as it doesn't explode, I do think it's investable for U.S. investors.
David Bianco of DWS Investments. It's real, Tom. It's getting worse. And I think the takeaway for many people is that because there isn't a follow-up with policy, say tariffs in the same way there were over the last 2 years, that it's okay to sit back. You're comfortable watching this play out. But it's quite clear that for me, just looking at how the politics are playing out in America, this is going to get worse, not better, over the next 12 months.
And to that point, John, this is so important, is what is the real policy outcome distinctions between President Trump and President Biden? I'm not sure there's a wide gap there, John.
I don't think there is, and I think they're both aware that the electorate wants to see a harder stance on the Chinese. What's interesting, Tom, is whether we get a different approach. Let's say the President of the United States stays in the White House, Donald Trump, he's there for another 4 years. You're going to see more of the same, maybe. If you get a Vice President Joe Biden going to the White House, Tom, as the President of the United States, I would say look back to what Senator Warren put out last summer about standards, about human rights. Is this government, if it does become the next government of the United States, going to push that issue a whole lot more? And we know how uncomfortable the Chinese Communist Party is with that particular issue.
Oh, the question here is also overreach. We spoke with Carla Freeman of Johns Hopkins University here an hour ago, John, and she was adamant of the sensitivities in the South China Sea. I would note, John, to your point on Senator Warren of Massachusetts, that those sanctions yesterday were mostly Republican senators. She's got some support from the Republican side.
Tom, I don't know if you can define this as an overreach. I think this is aligning yourself with your allies in the region. That 9-dash line, 10-dash line, 11-dash line going back to the 1940s, that's been an issue for a long, long time. There was a tribunal back in 2016 that effectively ruled against China. This is the United States aligning itself with that ruling from 2016 and aligning itself with the allies in the region. What I would like to see personally, for whatever that's worth, I'd like to see more of a broader approach in the region, Tom, on the economics, not just on the foreign policy.
Well, that is
and I think that's got to be the next step.
John, I was in Hong Kong, the collapse of WTO. By chance, I was in Hong Kong that day, and what you're asking for is an intelligent multilateral approach. We will see.
I hope we can get it. Tom Keene, alongside Lisa Bravitz, I'm Jonathan Ferro. In your market this morning, it is all about the bank numbers. It's not doing anything to dent the appetite in futures. Equity futures up 0.4% on the S&P from New York. This is Bloomberg.
Now the latest news from New York City and around the world. Here's Michael Barr.
Tom, Lisa, John, thank you very much. Top infectious disease expert Dr. Anthony Fauci linked the surge in U.S. coronavirus cases to the country's failure to shut down completely, then a rush to reopen too soon. Fauci spoke at the California Stanford School of Medicine.
And we made a set of guidelines a few months ago which had good what we call checkpoints. We had situations where you do entry, then you would have phase 1, phase 2, phase 3. Unfortunately, it did not work very well for us in an attempt to.
The order we have to remove for Japanese yen because it's moved on. It moved too far. We'll see if it will go closer. We'll see what's going to be later. Okay, so order to buy Japanese yen at 107.360, remove.
Today's hearing for Ghislaine Maxwell is scheduled in Manhattan Federal Court. It occurs a day after prosecutors argued in court papers that the 58-year-old British socialite will flee the country if she is freed on $5 million bail. The Trump administration's rejection of broad Chinese claims in the South China Sea is being seen in Asia as an election year political move. China accused the U.S. of trying to sow discord between China and the Southeast Asian countries. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr, and this is Bloomberg.
NJIT, New Jersey Institute of Technology, makes innovation happen. NJIT faculty mentored Christoph Camacho when he was a student, helping him co-found a startup and patent a device that uses drone technology for reforestation and to collect valuable data for land management.
I founded Paratrees back in 2016, taking what I learned from my research at NJIT and migrating it to a startup. Our technology is to really enhance land management operations, so we work very closely with land management companies. So we have a drone that performs precision reforestation, and we do storm damage assessment, having access to drones that can collect data so it's much faster. And what is more important, we help them drive management decisions. NJIT has been there every step of the way, going full force with my company.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at seic.com/seize change.
Influential conversations from
Should your kids go back to school? Ask Andrea. She's a teacher.
We're doing everything we can to keep the children safe and happy at school, which is why it's great that more of those who can are coming back, not only for their education, but for their overall well-being too. It gives them a routine, helps develop their social skills, and they get to see their friends too.
If your child is eligible, they should return to school. The government is working towards getting all pupils back in September. Stay alert. Control the virus. Save lives.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Tuesday afternoon by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
Eurotunnel Le Shuttle is a safer way to get to France and beyond, with social distancing built in. There's no scrum at security, hanging around for your bags, or shouldering strangers in your seat. With Eurotunnel Le Shuttle, simply drive on at Folkestone and stay in your car comfortably. Then drive off 35 minutes later. Stay safe. Go Tunnel, Eurotunnel, Le Shuttle, a safer way to France and beyond.
Banks are working with the borrowers, individuals, businesses, larger corporations to help bridge the gap from the pre-COVID economy to the post-COVID economy.
Mike Mayo there of Wells Fargo, pushing the same line we've heard for quite a while over the last several months. Banks, not part of the problem this time around, part of the solution. We've heard that from many, many analysts. Mike Mayo believing that this is peak pain for the financials. This morning for JP Morgan, we are firm, up by around about 2% in the pre-market. In your equity market more broadly, advancing 0.4% on the S&P 500, elevated by around about 12 points. From New York, alongside Tom Keene and Lisa Abravitz, I'm Jonathan Ferro. Earnings season, Tom Keene, in full swing.
Earnings season in full swing, and it's amazing how Gerard Cassidy, RBC Capital Markets, really liked Mr. Mayo, saying this is as bad as it gets, and he was quite forceful about better times to come, particularly looking out past 2 3/4. Someone to discuss this and provide broad market perspective is Gina Martin-Adams. She is Bloomberg Intelligence Chief Equity Strategist, but what she's really in charge of is courage. More than anyone I know, she's never gone to cash. She's always participating in the market, and that has been a better than good outcome for her. Gina Martin-Adams, if you have confidence to be in the markets right now, can you have confidence to be in the financial sector and the too big to fail banks specifically?
Yeah, I think it largely depends upon your outlook for revenue growth. I mean, frankly, these are extremely discounted stocks at large. The financial sector, when you look at the history, has been trading at an incredible discount for most of this year. Even though they bounced back significantly from March to early June, this is a group that's still trading between 1.5 and 2 standard deviations below 5-year average. So you've got a discount available to you. It's really just a question of where do you think things are going to head? Because in order for this group to outperform, it's got to get better revenue growth. That's been the sticking point throughout this cycle. Everybody focuses on the yield curve, but the reality is when you look at the factors driving financials, it's that lack of revenue growth that's been incredibly important. So you've got to get some economic visibility, I think, to feel a little better about your investment opportunity in this space.
And I went right to the revenue growth headlines, folks, that you see coming across the Bloomberg. And it's real simple, Gina. That has to get fixed, and the way it gets fixed is cost cutting. Forget about aggregate demand. Forget about yield curve dynamics is one of their ways here, one of the factors to a better outcome. All these banks are going to start cutting costs.
Yeah, they really have no choice because revenue has been somewhat paltry. I mean, you've got JP Morgan and Citi out this morning talking about trading revenues extraordinarily strong. That certainly has been an offset to what's happening with the consumer books and the loans in general. But that big portion of sort of their core lending operations is a massive drag. The result of slow growth there is going to be that they have to cut costs to maintain some degree of margin stability, because that's what's going to drive earnings growth in the shorter term. The other thing that they've got to contend with is the yield curve. When we look at the history of the yield curve, it does have some predictive power for obviously net interest margin and margin at large for the financial space. The yield curve steepening out of the market's low this year has been about half as much as you usually get following recession lows in stocks. So it's been a really, really slow climb for the yield curve, and that's going to restrain growth in this space as well. So absolutely, they're going to have to cut costs to right-size operations with a slower growth environment and also contend with what's happening in the macro.
Gina, it's important that you say that they need to have some visibility into the economy to gain conviction about bank stocks. Just to give you a sense, one of the supports to profitability has been investment banking revenues. And we have JP Morgan CFO coming out and saying that they do not expect investment banking fees to be as high in the next quarter, given the fact that we are expecting a decline in debt issuance. Gina, just broadening out to the rest of the market, there was a story today, Bank of America fund manager survey came out for the month of July, showing that people believe, 74% of all respondents believe that tech is the most crowded trade. It is a record for the survey. Do you agree?
Oh, yeah. Tech is absolutely the most crowded trade. There's no doubt about it. It's been between tech, some of the select consumer discretionary names such as Amazon, as well as communication services, and then healthcare. Those are kind of the only spaces that investors have been really willing to put longer-term capital to work over the course of the last several months. They're just sort of hiding in what is more defensive stocks at this point in time, and defense is a very different tone and characteristic than it was, say, a year ago. It's not utilities and real estate and consumer staples so much as the technology, healthcare, communication services groups that actually do have relatively stable growth prospects. And even more so, stable growth prospects not only in 2020, but growth possibilities into 2021. That combination has been sort of the ideal space for people who are willing to take a chance in equities to put capital to work. Now, is that going to be the winner longer term? If we do see economic recovery, what you should see is some catch-up in these lower valuation stocks, high cyclical groups, higher risk, higher beta groups that no one really wants to own, like the financials and the industrials, the rest of consumer discretionary, maybe even some energy and materials stocks, which, frankly, that's just been so volatile, but it is high value. I mean, there are extraordinary discounts available in this space if you can find that economic visibility.
Catch-up is not the same thing as tech selling off. Do you see tech as being overvalued and poised for a fall, or just poised for an underperformance relative to other parts of the market?
Yeah, most of the time what you see in economic recovery is still participation. You get participation from all groups, but you see the cyclical stocks lead the recovery. You see the catch-up story. So we shouldn't see an outright decline in tech valuations. That said, there has been so much crowding in select names and select portions of tech. Think software, some of the services groups, even some of the communication stocks, where investors have hit in a tremendous amount of capital. You may see a modest rotation out of those groups in order to put that capital to work in other cyclicals. But in general, it should be a catch-up, not necessarily a massive sell-off, even though valuations do look somewhat extended. And that's a big if. I mean, I say if very carefully because I don't have a ton of conviction that we're going to have this rip-roaring economy developing into the second half of this year and into 2021. So even in our sector scorecard, we're still hiding in those defensive groups. We've got technology and communication services and healthcare right up at the top as well.
I'm not sure how many people actually have high levels of conviction about anything right now. Gina, fantastic to catch up with you as always. Gina Martin-Adams there of Bloomberg Intelligence, the chief equity strategist. Lisa mentioning the commentary coming from the conference call for JP Morgan at the moment. Our colleague Shanali Basak listening in on that and pointing out that the CFO just said May and June are the easy months due to the government stimulus plans. Lisa, this is what we reflected on, touched on about an hour ago, that for many of the loans taken out, for the loan book over at JP Morgan, whatever bank it might be, they have been so supported by the amount of fiscal help we had through those couple of months. Will that fiscal hand, that assistance be there for the next several months?
Well, and people are expecting a re-upping of the stimulus programs that the government has, although Mitch McConnell coming out of the Senate and saying that they're going to present their plan for additional fiscal stimulus next week, and that will be the beginning of discussions. 2 more weeks until those enhanced unemployment benefits, John, run out.
The race is on for fiscal authorities. On this program up next, US CPI in America. Will be catching up with Bloomberg's Michael McKee and later Chris Ferrone of Strategas. That's next. This is Bloomberg.
The following is a message from PGIM.
Welcome to Outsea in 60, Perspectives from PGIM Thought Leaders. Here's Mark Baribeau, the head of global equity at Jennison Associates.
You're looking at bigger implications of technology playing a role in keeping us all connected, giving us access to information or goods very quickly. So we don't see any of those trends changing. In fact, they're likely to accelerate. There's some new things that have come along, though, that people might find useful, like telemedicine. There were skeptics about that, and I think the more people using it, especially the more doctors are using it today, the more they're liking it. You can see more patients. It can be more effective. It might actually be a better solution.
Hear more PGIM perspectives at pgim.com. That's pgim.com. Partner with PGIM, the investment management business of Prudential. These statements are not intended to be investment advice and should not be used as the basis for any investment decision.
Imagine being denied an apartment because of your religion or your race, or because you have children or a disability.
It's so wrong.
Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side.
It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
How do we control coronavirus now? Listen to Claudia. She's a care worker.
I got the call from NHS Test and Trace. Told I'd been in contact with someone with coronavirus. Couldn't believe it. I had to isolate at home for 14 days. Couldn't go to work, couldn't go to the shops, couldn't get out to exercise. I didn't even feel ill. But do you know what? To protect my family, my friends, my community, well, you just do it, don't you?
Stay alert, control the virus, save lives.
Decisions, decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Tuesday afternoon by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
Eurotunnel Le Shuttle is a safer way to get to France and beyond, with social distancing built in. There's no scrum at security, hanging around for your bags, or shouldering strangers in your seat. With Eurotunnel Le Shuttle, simply drive on at Folkestone and stay in your car, comfortably. Then drive off 35 minutes later. Stay safe. Go Tunnel, Eurotunnel Le Shuttle, a safer way to France and beyond.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg TV and radio, waiting to bring you some US CPI data with equity futures still firmer, up around about 9 points on a day, firmer by a third of 1%. Here's the data. Here's Michael McKee.
Well, John, it's a bit of a beat with the consumer price index for urban consumers increasing 0.6 in the month of June. That is a tenth more than had been forecast. It pushes the year-over-year number up to a 0.6 gain from a 1/10 gain last month. Still way, way, way below what the Fed is targeting, a 2% rate on the PCE index. CPI X food and energy rose 0.2. That's the first monthly increase since February. Motor vehicle insurance, they say, increasing sharply in June was one of the reasons. The big reason for the higher than expected number on the monthly basis is the gasoline index. Gasoline energy index increasing 5.1%. Gasoline up 12.3% after that deal between Saudi Arabia and Russia. So gasoline really the story here for the CPI. We've been looking for some sort of disinflation. We've certainly got it, but we got it on a 1 month basis now, increased back again because of energy prices, particularly gasoline prices. Food prices on the month up by 0.6 as well, pushes them up 4.5% on the year, and food at home up 5.6%. Interesting because that really, along with gasoline prices, helps drive consumer expectations of inflation. One reason that we've seen consumer expectations for inflation rise a little bit, John.
Mike, just to get to the price action briefly, equity futures this morning are raising all of the gains just in the last couple of minutes. I haven't got a clear idea as to why. I'm surprised to see that in the way that it has done in the last 10 minutes, but that's where we are, just about positive on the session. Mike, overwhelmingly the consensus in the economics community, which you're a part of course, is that this is a disinflationary environment. Any reason to believe it isn't?
Well, the one thing that has been playing with some Wall Street traders' strategies is the idea that if the economy is coming back, you may have some shortages of goods, and that may push up prices in some areas. That's kind of hard to see at this point overall with the continuing lockdowns, the re-lockdowns that we're beginning to see. But that is one aspect of it that could come into play once we see the economy start up again.
You know, what's so important here, Mike, this is one quick question, if I could, is the animal spirit of the economy. You and I have followed those that talk about nominal GDP, this combination of real economic growth and inflation as being so important to the spirit of America. It's not there right now, is it, Mike?
No, we're dealing with the same problem we've dealt with for some time. Do people have confidence to go out and shop?
Yeah, exactly.
And if they do, then that, in theory, would lead to confidence among businesses to produce more. But nobody has any confidence at this point. The debate is about a V and a U and a W, and it's beginning to look like we're somewhere between U and W at the moment.
And 10-year yield coming down here 0.6162% right now. Michael McKee, thank you so much. Our international economics and policy correspondent. Right now, on the charts, he is just exquisite at the trends of the market. Christopher Verone joins from Strategic. Chris, an open question to begin. What is the trend of the equity market right now?
I think the tactical trend is sideways. I mean, we're digesting what was a 40% rally off the lows. We don't have much seasonal support over the next 60 to 90 days. So I think the next month or two is going to look a lot like the last month or two, where markets just don't make a lot of progress.
Chris, when do you think that the virus counts are going to matter again?
So, you know, it's an important question, and it's certainly the topic of almost every client conversation we have. But I would encourage people to think about it a little bit differently. I think this is less about what the trajectory of the virus is. I think this is about the financial market's interpretation of that. And what I've actually been encouraged by over the last several weeks, as the news around the virus has gotten more dire, you have not seen credit conditions really deteriorate to any meaningful extent. And that's just a big difference from late February, early March, where the credit backdrop really began to deteriorate in a very, very quick fashion. That has not happened here. So I think credit markets are actually more important than what the daily virus count is.
Chris, we're just looking right now, Jamie Dimon speaking on the call after J.P. Morgan reported earnings, and he was asked about the health of the consumer, and he said this is not a normal recession. Consumers' incomes are up, savings are up, home prices are up. The traditional recessionary part has been delayed, and it will come down the path. We will see the weakness down the road. How well is that being priced into markets currently, given the fact that we do have some of the delayed pain that will come along with this recession?
Yeah, you know, I'm always hesitant to forecast. I don't think anyone out there is a great forecaster. Certainly will defer to Mr. Dimon on his expertise. I do think when you look at what the market already discounted, I mean, you had a 40% drawdown in stocks. And remember, most stocks didn't peak in February of 2020. Small caps peaked 2 years ago. Cyclicality broadly peaked in the fourth quarter of 2017. So I'm trying to ask ourselves the question, has cyclicality, have small caps, have the secondary issues after a 2-year bear market, are they starting to come out of that? And I think the resiliency to really bad news over the last 4, 5, or 6 weeks, you got to give markets a hat tip, because, you know, we're talking about discounting mechanisms. The market surely is aware of what the future will hold. We just got to figure out what it's focused on.
Well, Chris, let's get into the technicals. Over the last month, it's pretty clear that breadth has narrowed. The post-COVID highs is something we can't breach and hold. We saw that take place yesterday. How key is that for you?
You know, it reminds me a lot of, and I remember it distinctly, it reminds me a lot of like May through July, August of 2009. You had this 45% move off the March 2009 lows. And then you went through 3 months of all the leading issues starting to correct, breadth deteriorated. It was a very, very tense 3 or 4 months as the market consolidated that gain, and it was resolved higher. So I just think it's interesting that the expectation is, I think, among a lot of investors, that this consolidation we've been in over the last month must resolve lower. I'm not convinced of that.
And right now, folks, Bloomberg Surveillance and Nerd Alert, we're going to do this with Christopher Verone because he can do it. Christopher Verone, I was stunned yesterday to look at the Tesla chart, and there are 5 gaps, folks, jumps within the Tesla stock price. 5 since the beginning of June. I believe I can say, Christopher Verone, I've never seen that. This goes back to John Maggie and his classic text of 1948. For our global Wall Street audience who've all made a ton of money on Tesla, what does it signal that Tesla has surged through 5 technical gaps just since early June.
I think when you look at Tesla or the chart in particular, this has really been the hood ornament of liquidity. It's been the hood ornament of the growth trade. Is there an excess to correct here? Likely. We had what looked like blow-off volume yesterday. You did almost 40 million shares on Tesla, similar to what you did near the high in early February. But the trend here is up. So I would approach this from the perspective of, what do you do with weakness? And when trends are positive, you're inclined to buy weakness. I think you start filling some of these gaps near 1150, 1200, 1250. I'd be more inclined to be a buyer of that weakness given the trend.
Bring that over to the major growth stocks that have driven this market. Is it the same thing? Buy the weakness when they fill the gap, get long?
Yeah, and I think that's a process that's going to play out over the next several months. I think the more difficult question is, as some of the high flyers correct, do some of the secondary issues step up and fill that void? For example, the banks, right? As earnings get underway this week in that group, is that going to be enough to support the tape while some of the high-flying momentum stocks actually come in here? I think that's a question that's going to be answered over the next several days here.
Chris, a little bit of risk aversion coming in ahead of the cash open. We got equity futures declining now, down by 0.1%. Mild moves, but worth pointing out in the bond market. Yields were higher by a basis point, now lower by about a basis point on a 10-year maturity to 0.61%. Before we let you go, Chris, the outperformance that we've seen in EM over the last month, how constructive are you on that continuing?
So I want to answer that a little bit differently. I want to answer it through the lens of the U.S. dollar, and I'll say this. I'm very, very bearish on U.S. dollars here. I think we're putting in a major top in USD, and I think as a consequence of that, we should expect to see some new developments in the macro landscape. One of those, John, being the resurgence of emerging markets as a leadership idea, and not just EM, but rest of world quietly starting to outperform.
Okay, Chris, this is critical. I've got to jump in. Kit Jukes of SocGen asked this question this morning. If stocks stop going up, can the dollar really decline? Now, if you think stocks are going sideways for the next several months, is that an environment where the dollar gets weaker?
Yeah, I think it is, and I think weaker dollar is a headwind to some of the big index weights that have driven this market over the last 4, 5, 6 weeks, while it may be a tailwind to the basic resources, to the industrials, to even the banks that have largely been on the sidelines. So I think what we're on the cusp of here is some leadership change, and I think the dollar is driving that. This is the most important chart in the world. U.S. dollar is topping. I know that's a bold call. It's what we see in our work.
It's just bouncing as you say those words, Chris. I appreciate that this is a long-term call, not a 5-minute time horizon. Chris, great to catch up with you, as always, mate. Chris Verone, head of technical and macro strategy and Strategas Securities. Tom, I think it's a longer time horizon than, say, 5 minutes. How many times have we heard this call in the last month or so, Tom? The dollar weakness call. Hearing it again from someone I really respect as well, but hearing it again this morning.
Yeah, there's no question, John. We are hearing the call again. I don't have any extra grind here. What I do is watch the sub pairs. I look at Euro Swissy, and, you know, the fact is it's been very, very quiet. We just have to see which way it breaks.
Lisa, this has been a story that continues to build over the last month or so. What I think is unique about this moment, and forgive me for sounding like a broken record on this issue, what is unique about this moment is that people think U.S. equities can do poorly and the dollar can still weaken from here. That's a change because typically risk appetite needs to remain elevated worldwide to get that dollar weakness. Now they're looking for the U.S. equities to actually almost look weak, poor, but still get this risk appetite elevated elsewhere abroad and then get the weaker dollar off the back of it. Or maybe, as Chris Verone was pointing out, a weaker dollar in front of that move.
Yeah, well, usually this call is paired with this idea that Europe is ahead of the U.S. in combating the virus. Europe is going to approve the $750 million euro plan that they have on the table. A lot of questions remain, but a lot of it hinges on euro strength, and that, to me, is a big question.
Key week for Europe as well, Lisa. Coming up on the program, a key couple of weeks for big tech with earnings in focus. Why Amazon can go a whole lot higher from here. Jason Bazin at Citigroup coming up next, right here on Bloomberg.
Now with the latest news from New York City and around the world, here's Michael Barr.
Tom, Lisa, John, thank you very much. Connecticut and New Jersey teamed up with New York for a travel quarantine order that now affects 19 states. New Jersey Governor Phil Murphy spoke today on ABC News. Good morning, America.
If we could control everything within our four walls, that'd be one thing, but we are the United States of America, and we have to look with great concern on the surges elsewhere.
Texas reported 5,655 new COVID-19 cases yesterday. Sylvester Turner, the Democratic mayor of Houston, Texas, is proposing a 2-week shutdown to help combat the virus, but he needs the approval of state Republican Governor Greg Abbott. Turner compared the pandemic spread to that of a forest fire.
Numbers keep growing. The number of hospitalizations keeps growing. We just need to take this collective effort, maybe a 2-week stay home, work safe order, reset to cool things off, and then gradually move forward again.
The U.S. has carried out its first federal execution in 17 years. A man who killed an Arkansas family in 1996 was put to death in Indiana. Daniel Lewis Lee had been scheduled to receive a lethal injection yesterday, but a court order delayed Lee's execution. Hundreds of sailors are fighting to save a burning Navy warship docked in San Diego. The USS Bonhomme Richard caught fire on Sunday and has sent smoke over downtown. More than 400 sailors, aided by outside fire agencies and Navy helicopters, are pouring water on the flames. The blaze is burning 2 decks above the ship's fuel supply, 1 million gallons of oil that could spill if there is a rupture. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr, and this is Bloomberg.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. Psychology plays a big role in determining things like home prices.
I think this is just very risky times.
Robert Schiller is professor at Yale and co-creator of a well-known home price index.
There's also the problem of the affect heuristic that psychologists talk about. If you're scared by one thing, you tend to be scared by everything for a while. And so we were really got a scare from this COVID-19, and it isn't over yet.
CoreLogic says home prices are currently propped up by pent-up demand, and economists there are forecasting prices will drop almost 7% from last May to next. Schiller says the price drop could be even bigger in some places.
I'm thinking that home price declines will be bigger in downtown areas where apartment buildings have elevators, and you worry about social distancing. Really, urban situation is not going to be quite as strong in years to come.
And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE SIPC.
Connecting decision makers to a network of news.
Millions of people in the UK struggle to put food on the table. That's why Asda's donated £23 million to FareShare and the Trussell Trust since 2018. Please help us do more by donating to our Fight Hunger trolleys in store. Asda, we're all in this together. FareShare and the Trussell Trust are registered charities. See asda.com/fight hunger.
Get ready for the University of Bedfordshire. We've got all you need to make ambition become reality. To make lifelong friendships, to make contacts in your chosen industry, to make a name for yourself, to make it. In fact, we've got everything except your application. So get it in, sit back and relax. Wait, actually, check out our generous scholarships and bursaries for support at every step at beds.ac.uk. Okay, now you can relax.
Thanks to National Lottery players, the Emerald Centre are now providing emergency food supplies and support for people in Bedfordshire like Alan. Thank you. And £600 million of National Lottery funding is on its way to thousands more local projects in England and across the UK during these exceptional times.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you. The National Lottery. Your numbers make amazing happen.
Minions, did you know Sky Broadband Superfast guarantees your speed? No, Stuart, it doesn't guarantee you'll win the game. Or that your video will go viral. Or that you'll match with the love of your life. But Sky Broadband Superfast does guarantee the speed we promised or money back. So reliable, it's minion-proof. Sky, believe in better. Sky Fibre areas only. Speed measured to hub. Must drop below min download speed for 3 consecutive days. 1 month subscription refund. Claim up to twice in min-term after first fortnight. See sky.com.
We've got a set of assets that are unique to Walmart, and we're trying to put them to work. So maybe one of the big differences as it relates to kind of a digital view or an e-commerce view is how we're using our stores.
Doug McMillan.
New order placed for euro at 113.68. So I'm placing a new order to buy euro at 113.68. Okay, it's moved too far. I will remove this order. Let's see what's happened next. Okay.
A negative yield in the United Kingdom, and frankly, John, going ever more negative.
And trading inside Japan just briefly.
Yes.
A lot of people talking about that, Tom. Look, huge change and a huge amount of uncertainty really dragging down the front end worldwide.
Interesting to see, and of course, with red and green on the screen here, the Dow up 53 points. Some real churn to the market right now in the last hour. This is going to be fun. What's interesting about Jason Bazinet's work at Citigroup, like a lot of other sell-side analysts, is, yeah, the headline will grab you. But what's required of Jason Bazinet is you have to read into the report. And I did that the other day on a shocking call for Amazon to move up higher, 15% or so. But essentially what he discussed, like Douglas Cass discusses and others on the street, is the extrapolation of the business model of Amazon. You can do that if you've got a mechanical engineering degree from Vanderbilt. And Jason Bazinet joins us this morning. Jason, I love the way you engineered the report with Amazon essentially being an exercise in systems analysis, an exercise in industrial engineering. What will Jeff Bezos engineer next?
Well, thanks so much for having me on, Tom. I think what's next on the agenda for Amazon is essentially to take its logistics infrastructure and do what it's done in the past, which is repurpose that to serve businesses with higher margin services and take on essentially FedEx and UPS. And that's going to be the next leg of growth, I think, for Amazon.
I think a lot of the story is obvious to people, but you really dive into this idea that they will find a new business away from the cloud, away from moving cardboard boxes, of, as you say, taking on FedEx. What will be their delivery distinction?
Well, I think the distinction is that they've already, if you talk to Chris Weatherby, who's our logistics analyst who covers FedEx and UPS, what he talks about is that e-commerce for the big guys is not that attractive of a business because the package density for e-commerce is so low. Where the package density goes way up is in the B2B side, where the number of packages per stop almost triples. And that means it's a higher margin business. So Amazon shareholders today are essentially already absorbing the cost of the very low margin logistics business associated with e-commerce. What's yet to unfurl is the higher margin logistics business serving businesses.
All right. Well, Jason, right now, Amazon is priced as if it were a global superpower bigger than the entire world's retail sector. This, according to Rob Arnott of Research Affiliate, saying that perhaps things are getting a little frothy. What's the right industry? What's the right comparison for Amazon, given valuations and given its expansion into the logistics area, as well as AWS?
I'm not sure that there's a great global comp. I mean, that's the beauty is Amazon has such an unbelievably unique strategy that there is no comp. What we're using to sort of guide our valuation work is historical valuations. And what's interesting is if you did year-end stock price and year-end EBITDA over the last 6 years, Amazon fetched somewhere between 26 and 37 times EBITDA. Our price target is 25 times EBITDA in 2022 numbers. That's how you get to 35.50. So I don't even feel like, anything is really stretched here. Of course, we are uncomfortable. If you look at the market cap of Amazon, if you look at the run that the stock has had, you could say, it's sort of a bubble. But I'm just telling you, you look at the numbers, you look at the multiple, I don't think it's a bubble. And I think part of that is driven by the fact that Amazon sort of went into hibernation for about 18 months. The equity did, from the middle of 18 through the end of 19.
Yeah.
And I think some of this is frankly just sort of a catch-up trade. But the numbers, if our forecasts are right, and absolutely support the stock moving higher.
Jason, some people have brought up the R word again and again. That's regulation and regulatory risk. And people looking at that as a serious thing perhaps last year, this year shrugging it off and saying that regulators aren't going to get to that, if they do, for a long time. Do you think that this is more of a risk than perhaps people are pricing in?
Not for Amazon. I mean, if the press reports are accurate, the area that the antitrust authorities are digging into is maybe the use of data for the third-party vendors to influence what products Amazon sells as a first-party product. That is not even on the buy-side's radar screen as an underlying narrative of the equity. So if that's where the regulations land on Amazon, I think it's a big nothing burger.
Jason, one final question, if I could, and I'm not going to do a lot of mathiness here, folks, but there's a way you do what's called a logarithmic extrapolation of any blue chip stock. It's like a sovereign wealth fund thinks about a company. Jason, your target is somewhere out in 2021, maybe early 2022. Douglas Cass talks about Amazon 5000, which is obviously out further. Your critics would say all you're doing is extrapolating out the 10-year trend of Amazon. Are you above that extrapolation or on it?
Well, I don't know if I'm above or on it, but I can tell you that the analysis that we're doing is essentially looking to make sure that the growth at Amazon doesn't slow. If the growth materially slows, the multiple compresses. As long as you have ample headroom in e-commerce and a lot of these other B2B verticals that Amazon is pursuing, I don't think that the growth is going to slow. I mean, I can just give you a couple quick data points, but, digital advertising, the world is 50% digital advertising now. E-commerce is probably 15. If you look at Amazon's market share in the U.S. in e-commerce, it's probably 35. Rest of world ex-China, it's in the mid-teens. If you look at their market share in a lot of these B2B verticals, we're in the second inning, the bottom of the second inning. So I just think there's a lot of growth left.
Jason, thank you so much. Jason Bazinet, 3550 on Amazon, out a bit. He is with Citigroup. Lisa, it's an extraordinary story. I don't have an accent here, but, it's just simple to say, boy, is it a heated cocktail conversation to talk about Amazon 2 or 5 years out.
Yeah, shares up about 70% year to date. The question is, where can the growth come from? I mean, logistics, very promising, and yet where are the revenues going to come from given some of the challenges we've seen with UPS and FedEx? And then on the other side, retail, how much can they already consolidate the retail sector? How much further does that have to go given where we are right now, Tom?
Well, let me start a rumor. They're going to go into banking and buy Wells Fargo. That was a Segui, folks.
All right.
Jeff Bezos to buy what we're doing at Wells Fargo. It is a troubled story today, folks. No question about it. JP Morgan doing better than good. Citigroup coming out with earnings and more tomorrow and Thursday. But clearly there is a troubled bank at Wells Fargo. Their chief financial officer will join Bloomberg this afternoon to really dive in to the financial dynamics that leads to a better business plan. John Shrewsbury of Wells Fargo. Look for that in the 4 o'clock hour. It is an extraordinary day on Bloomberg Radio, on Bloomberg Television. Stay with us for this great debate. This is Bloomberg. Good morning.
I've always wanted to... How do we control coronavirus now? Listen to Claudia. She's a care worker.
I got the call from NHS Test and Trace. Told I'd been in contact with someone with coronavirus. Couldn't believe it. I had to isolate at home for 14 days. Couldn't go to work, couldn't go to the shops, couldn't get out to exercise. I didn't even feel ill. But do you know what? To protect my family, my friends, my community, well, you just do it, don't you?
Stay alert, control the virus, save lives.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Tuesday afternoon by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
At Ring, we've reinvented the doorbell. So no matter where you are or what time of day, you can watch over your home and the things you care about. Ring Video Doorbell streams HD video and two-way talk straight to your phone, so you can speak to whoever's at your door from anywhere.
Delivery.
Oh, great. Can you leave it round the back, please?
Sure, no problem.
And it's so simple, you can install it yourself in minutes. See, hear and speak to whoever's at your door from wherever you are with Ring Video Doorbell. Available at ring.com and selected retailers.
Wondering what to play next? Want to know what other TuneIn listeners are listening to right now? Head to the trending section under Browse to explore the most popular stations and podcasts on TuneIn today. Millions of listeners like you can't be wrong.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Okay, here we go.
With the NFL draft in the books and the schedule set, check out a TuneIn podcast for daily updates on the lead up to the 2020 season. Like the Ringer NFL Show, where a rotating cast of Ringer experts talk with players, coaches, and special guests about the NFL landscape.
A lot of the other teams that we consider...
Or ESPN's NFL Live.
If there are some delays because of the COVID-19...
Search sports on TuneIn to explore these pods and much more.
Staying current on college hoops starts here. On the Eye on College Basketball podcast, CBS sports columnists Gary Parrish and Matt Norlander bring you commentary, insider information, and statistical analysis covering the entire NCAA.
The amount of earning potential you could have had there, or if you had gone to play at any other place with a chance to play in the NCAA tournament, win a national championship, none of us would have faulted Cunningham for doing that, but he decided this is where he wants to be in the face of a postseason.
Search Eye on College Basketball on TuneIn to listen.
This news anywhere. We've actually given the matter quite a bit of thought.
Let's get now to our guest joining us from Bangkok. She joins us on the phone from the Hudson Valley.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com.
What does that moral leadership look like to you?
Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at Bloomberg Quick Take. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
A lot of us are still in a bit of a guessing game, trying to determine how severe the downturn will be. The only thing that can bring an end to the crisis is containing the disease.
Finance.
We are the one country where people depend on employment for health insurance in the middle of a health crisis.
Investment.
Real yield is a scarce asset these days. It's just unknowable, of course, where things are going.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good Tuesday morning from New York City and points beyond to our worldwide audience. A mixed bank earnings season kicked off today with some solid numbers from J.P. Morgan, but disappointing results from Wells Fargo. The key theme appears to be solid trading results, masking underlying weakness from consumers and businesses beset by the pandemic. Equity futures this morning are mixed at the moment after they're off their earlier levels as investors digest earnings and concerns about sober COVID-19 metrics from key U.S. states. To get the latest in what is happening in those equity markets, let's turn to Bloomberg Stocks editor Dave Wilson. Dave, what are you looking at this morning?
Well, I mean, you're talking about the bank earnings, Paul, and we really do have to start there. You've got Wells Fargo down more than 5% in early trading. The bank posted its first quarterly loss since 2008 after setting aside $9.5 billion for loan losses. Now, that provision was greater than analysts expected in a Bloomberg survey. On top of that, Wells Fargo slashed its dividend by 80% to 10 cents a share. Not well received for sure. Citigroup has turned lower. Initially had some gains after their results came out. Though down about 0.75%. Second quarter earnings did fall less than projected. It's all about trading revenue from bonds, currencies, and commodities, what they call FICC. That revenue jumped 68%, which helped offset $7.9 billion of reserves for bad loans. J.P. Morgan, though, higher by 2%. Second quarter profit fell less than analysts expected. Trading revenue set a record for the second straight quarter, and that helped offset a loan loss provision of $10.5 billion. So, you're talking about three banks and, close to $28 billion in loan loss reserves. It does show you just what kind of shape consumers are businesses are in at this point.
Jamie Dimon's comments were cautionary as I read them.
Yeah, absolutely. And who can blame them? I mean, given what's been going on with the economy and a whole lot of people out of work and businesses shut down and possibly more shutdowns coming. We're seeing that in California. There's a lot to get through. Travelers is off 1.5%. The insurer posted a preliminary loss for the second quarter that reflects $854 million in catastrophe losses. Now, some of that is tied into severe storms in the south, and some of it's tied into the effects of civil unrest. So travelers getting hit on both fronts. Delta Airlines down 1.5%. The airline reported a wider second quarter loss and lower revenue than analysts projected. And Delta said it will add fewer flights than planned next month as a resurgence of the coronavirus curtails travel. And you're seeing losses in other airline stocks as well. American down 1.5%. United down 2%. Then there's Tesla, sort of living in its own world at this point, up 4% in early trading. Piper Sandler more than doubled its 12-month share price estimate for the electric car maker to $2,322. The new target is the highest of 30 analysts in a Bloomberg survey. Now, Tesla got up to $1,795 at one point yesterday. It was up 16%, but it closed lower. So it just goes to show you how much volatility there is in the stock. Watching Lockheed Martin, not seeing much in the way of movement in the shares so far. The defense contractor faces unspecified Chinese sanctions after the U.S. approved a possible $620 million deal to supply missile parts to Taiwan. Some analyst calls of note. You're seeing the cruise line stocks lower. Carnival down 2%. Royal Caribbean and Norwegian both down 2.5%. Ratings on all three cruise line owners were cut at SunTrust, Robinson Humphrey. The firm said it doesn't see business returning, quote, in any meaningful way, end quote, until next year's second quarter at the earliest. On the other hand, Hanesbrands up 6.5%. The apparel maker was raised the equivalent of buy from neutral Credit Suisse. The firm said Hanesbrands has weathered the coronavirus pandemic better than its peers. And Harley Davidson's up 2%. The motorcycle maker was raised the equivalent of buy from hold at BMO Capital Markets. One more for you, Paul. Mohawk Industries down 8.5%. The flooring maker disclosed it received 2 federal subpoenas on topics similar to those in a lawsuit over its accounting and sales practices.
Bloomberg Stock Center, Dave Wilson, thank you so much. We appreciate that. Harley Davidson, interesting. Are people buying motorcycles here? It's an interesting story as we deal with these bank earnings across the board. Tom, the bank earnings to me, I kind of saw some, extraordinary trading again here in the quarter. And I think J.P. Morgan had a record. But, boy, you just take a look at those loan loss reserves. You read between the lines of Jamie Dimon's commentary. And the banks are really, really girding for a really challenging next 2, 3, 4 quarters here.
I think that's an absolute key insight. You saw it in the comments. Of course, each of the comments are different, but of course, Jamie Dimon nailed it within about 6 paragraphs of initial comments. He talked about a port in a storm, which is their business strategy forward, and they really, really nuanced things. I would mention very importantly, Paul, that we forget how big these banks are. For them to take a $9 billion hit, we forget that that's 30 or 45 days of revenue. I mean, we forget how big they are. Bloomberg Surveillance this morning, brought to you by Cohn-Resnick Advisory, Assurance Tax. Are you applying for PPP loan forgiveness? Don't leave money on the table or fail an SBA review. Visit cohnresnick.com/loan forgiveness. Paul?
Yeah, thanks, Tom. So, interesting getting away a little bit from the bank earnings, getting a little bit away from the pandemic. The Supreme Court, as we know, Tom, has been very busy. A lot of rulings we've had over the past a week or two. One of them is as it relates to executions at the federal prison level. The Supreme Court is actually condoning those executions, and that comes at a time when public opinion seems to be shifting against death penalties across the board, particularly at the federal level. Bloomberg Law Supreme Court reporter Jordan Rubin joins us. So, Jordan, give us the latest on what's going on. I know there was an execution this morning, so following on the Supreme Court decision, give us the latest.
That's right. So for the first time in 17 years, the federal government carried out an execution. This was after a lot of back and forth litigation over the last several days, and after an order came down from the Supreme Court just after 2 a.m. this morning, after a late night of litigation all up and down the appellate ladder. And so this was a 5-4 decision that broke along the party lines of the presidents who appointed the justices with the Republican-appointed majority, essentially clearing the way for this execution and other upcoming executions to go forward.
What is the uniqueness here, state to state? I mean, this is not something that any of us cover. It's something that's from our past and from centuries past, et cetera. And I get folks that there's a raging debate on this. But Jordan, what is the uniqueness state to state? And here, the uniqueness of Indiana?
Sure. Well, Indiana is where the federal executions are carried out. That's why we have these federal prisoners there, essentially waiting to be executed there. And in terms of across the country, we're seeing an interesting shift in some ways, in some states moving to abolish capital punishment, while at the same time, really executions, aside from these new federal executions, which are essentially a new development, really most of the executions that take place in the country happen in just a handful of states, and even more specifically within that, in just a handful of specific counties for the most part. So, of course, we're used to seeing executions come from a state like Texas. There's often Supreme Court litigation there. And so what we're seeing with these new federal executions is the federal government going in the opposite direction of some states and public opinion, which has been shifting away somewhat from viewing capital punishment as a good idea.
So, Jordan, the recent Gallup poll shows the public's, I think we're at a relatively low level of support for death penalty executions. Do you think that factors into the Supreme Court's views at all?
Well, I think as we saw just at 2 a.m. this morning, we see that it certainly doesn't factor into a majority of the court's view. Certainly we're seeing these lines, and the death penalty being a controversial issue at the Supreme Court is nothing new. But one thing that we've seen getting into the personnel of the court with the shift of Justice Kavanaugh coming in and replacing Justice Kennedy, there is sort of a fortification of sorts in terms of the Supreme Court being more strict against death row claims. And so this morning's order is just the latest manifestation of that.
We'll certainly follow up with that. Jordan Rubin, thanks so much for joining us. Really appreciate your perspective and your experience on this issue. Jordan Rubin, Bloomberg Law Supreme Court reporter. Tom, so as we look at these bank earnings today, it's interesting. We're going to get a lot more this week here, but I think the market here, we're trading off of we're towards the lower end in the futures here, Tom. And I think part of it is due to this concern about what are the banks really trying to tell us here about the economy over the next several quarters?
I totally agree with the search for information. And the information is, Paul, you know better than me, is always about out front on the equity markets, getting out to August, getting out to September. And the fragility clicked in a little bit today with Delta Airlines.
Yeah.
Not because it did anything wrong or good or bad, but just it was information that we just haven't had. Yeah. It's going to happen every day, like 3-4 stories every day.
It is, and the information for me was not so much in the earnings, but to say they're not going to add as many flights in the near term as they thought they would even a few weeks ago. And that kind of tells you that the market has changed. The business has changed. The metrics of the virus have changed, and not for the better.
Red on the screen after the sell-off yesterday, futures at -14. With our news in New York City, here's Michael Barr.
Tom, Paul, thank you very much. With COVID COVID-19 rates rising in California, the state is locking back down under new orders. Bars and movie theaters are closed again. In many areas, gyms, churches, hair salons, barbershops, and indoor malls are being ordered shut down. Mayor Eric Garcetti asked Los Angeles residents to do their part to slow the spread of the virus.
The county's director of public health, Dr. Ferrer, said, quote, "Right now, everything is pointing towards an alarming trend." So while the city of Los Angeles' COVID-19 threat level remains at orange, we are on the border of going to red. It is up to all of us to make sure that we don't.
Los Angeles school districts are announcing schools will not reopen in-person classes in September. School systems across the country are working on what to do this coming fall. New Jersey Governor Phil Murphy on ABC's Good Morning America was asked today on the possibility of schools reopening.
The biggest concern is the passing of the virus from an asymptomatic, healthy young person to an older educator, administrator, someone with underlying health issues. And that's the thing we've got to watch the most.
The coronavirus pandemic stripped an estimated 5.4 million Americans of their health insurance between February and May. According to a new analysis from Families USA, it's a stretch in which more adults became uninsured because of job losses than ever in a single year. The Trump administration rejected China's expansive maritime claims in the South China Sea, reversing a previous policy of not taking sides in such disputes and escalating tensions with Beijing on yet another front. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom?
Well, Michael Barr, thanks so much. Greatly appreciate that. The data check, green on the screen, not anymore. All red. Futures negative 13. Dow futures negative 22. NASDAQ 100 red as well. The VIX just goes back to where it was in the angst. Yesterday afternoon, 32.53. That's a tangible backup in the VIX from a 27 level up a little more angst, a little more fear, 32.57. The yield space, yields are in off the CPI data and curve flatter. Please stay with us, Paul Sweeney and Tom Keene. This is Bloomberg Radio.
President of the Jewish Communal Fund, Zoya Raines, and her husband Robert Friedman, Jewish activists and philanthropists, talk about why they chose the Jewish Communal Fund for their charitable giving.
As very busy working parents, we wanted to focus more on the charity part of it and wanted to focus more on our children and less on the administration.
The Jewish Communal Fund is one of the oldest and largest donor-advised funds, but at the same time, they're totally up to date and have state-of-the-art systems for us to access and manage our contributions online. The assets in our fund at the JCF grow tax-free, so we can generate more charitable dollars to support the charities that we care about most.
Let JCF minimize your taxes and maximize your charitable giving.
We're incredibly passionate about our charity, and the JCF allows us to focus more on the charity and less on the administration and the headaches.
For more information about Jewish Communal Fund, visit our website at jcfny.org and request a new fund kit.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
How do we control coronavirus now? Listen to Steph. She's a bus driver.
Now that people are using public transport again, we really need to make sure that we keep each other safe. Passengers need to stay 2 meters apart. If that's not possible, make it at least 1 meter. I want to see everyone wearing face coverings over their mouth and nose unless you've got a good reason not to. And when you get to where you're going, you need to wash your hands. We've still got to play our part.
Stay alert. Control the virus. Save lives.
Decisions, decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Tuesday afternoon by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
Here's to you that learned with homeschooling that your kids are smarter than you. Here's to all the self-taught banana bread bakers. And to you that rock that very questionable homemade haircut. Costa is giving £3 to everyone that missed us as much as we missed you. Get your £3 in the Costa app today and enjoy a coffee, cake, or snack on us. Come on, you earned it. Terms and conditions apply. For details, visit costa.co.uk/terms.
News 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures are declining and European stocks dropping as investors weigh earnings season and the economic hit of rising virus cases. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures down 17 points, Dow futures down 43, NASDAQ futures down 131. The DAX in Germany's down 1.8%. 10-year Treasury up 3/30 seconds, yield 0.60%. The yield on the 2-year 0.14%. NYMEX crude oil's down 2% or 78 cents at $39.33 a barrel. COMEX gold is down 0.9% or $15.80 at $17.9820 an ounce. The euro 1.1367 against the dollar. The yen